Right, legends. I click the Streamer Rooney button. We have a lot to go through in this video today, guys. Has the Bitcoin bear market started? That is what we're going to go through. Has the Bitcoin bear market started? We got Pete No Stop in the building to be my co-host of this show. We're going to run through all the stuff in Discord. We're going to go through all the charts, guys. We'll look at the stock market tops. We're going to go through a lot of Bitcoin today, guys. I'm going to make this really simple because everyone on Twitter is shouting that the bear market has started. And really, they're just kind of shouting at the wind. There's no real analysis going to back it up. So in this video, I'm going to go through Bitcoin slowly, the way I go through Bitcoin to determine whether Bitcoin's in a bull or bear market. And I do think, ultimately, we are live, I think. Are we live? Is it going... It says that we got...
Oh, we're live, baby.
Are we live, man? We're live and ready to rumble, man. Yeah! So we're going to go through Bitcoin in a proper way because a lot of dudes on the internet are just screaming for bear market territory. And I'm going to go through some trades as well because I did post some of my trades. I'm actually in a long right now. I posted it in my VIP group, this area. It came down to my entry. I just about, by an inch, didn't get stopped out. So, guys, we're going to go through everything. Join. This is my VIP group, by the way, guys. Everyone's putting their charts and their patterns in here. This is everyone's heart rate right now. But, yeah, we're going to go to Bitcoin, guys. And we're going to look at this in a systematic way. We're going to go through the system I do. And we're coming down to support right now. You can see in here, Legends, we're actually at this level. But, so guys, like I said, there's three things that I look at. And also we'll look at the long and short ratio because I didn't go through it last week and I want to. And also, guys, Botmaster, my new product at my company, MDX Algo, is launching for Black Friday. Get on the wait list. The link is in the description. Here we literally go. So, Leggies. We have quite decisively now broken below the 200-day moving average. The first thing I'm looking at, guys, is this blue line, the 200-day moving average. And we have broken quite decisively below it at this point. The 200-day moving average has actually now come flat and potentially will begin to come down. Now, this is actually a pretty decent shot across the bow for the bulls, guys, because actually every single scenario you have in our past of the 200-day beginning to arc downwards, you see it as resistance. That's almost like the kiss of death for Bitcoin. In this specific example here, this is only one example, guys. You can go back multiple times, but you can see when we broke below the 200-day moving average, when it was aiming up, the price actually continued to rise. We saw resistance on the 200-day moving average, and then it began to... Well, actually, it was flat. It was flat, and then it began to fall down. We saw resistance on the 200-day moving average, and I will be taking, guys, on the premise of this happening multiple times in Bitcoin's history. Here we go again, below the 200-day moving average. Actually, it was still rising just about. We had another confirmation here of a continuation of the bear market. So usually, guys, if the 200-day moving average is facing down and you said it was resistance, you're likely going to go much lower. And we've seen that multiple times in Bitcoin's history. So at this point, guys, every single prior point, the 200-day moving average, break it back above it, wasn't aiming down. Up here, we broke below the 200-day moving average. It wasn't aiming down, still aiming up. Now we have potential for a head short here, guys, because it's going to come in at $100,000. And I've already been calling on my channel. If you do see the price, guys, go up to here, which is going to be where the 200-day moving average is. So let's just go by the flat level of where the 200-day is now. That's at 110,000. Over the coming weeks, this is slowly going to come around. If this takes another week or two to go around, the 200-day is not going to stay flat if the price is below the 200-day. It's going to start aiming down. So I would bet your bottom dollar, guys, that the 200-day moving average is going to come back round, and it's going to be around that $100,000 mark. And also, guys, $100,000 is a psychological level. We've now broken it pretty decisively, guys. We're at 93,000, and we could go lower. I already said, guys, so I'll go back. I'll retrace back to our prior weeks when I said if we lose this week, if we lose this wick, we're going lower. That's exactly what we got. But I'm saying this now, Legends, a trade, no matter what happens, when the price of Bitcoin retraces back to $100,000, it's it's a good idea. You don't have to do what I say. This is not financial advice to you, but it's a very good idea. And what I will be doing, I will be taking a hedge short position. Probably a significant position actually on this one because I want to hedge against my spot portfolio and I don't want my spot portfolio to draw down significantly if we go into a bear market, because a bear market will likely mean Bitcoin goes down 60% or more. I would say the minimum is 60% looking at any historical data of Bitcoin. There's no example of Bitcoin not falling less than 60% in a bear market ever. So I think it will do 60%. So I don't want my spot portfolio to draw down 60%. I'd rather hedge against that spot portfolio with a short position. This is how you really should be using shorts. And I will be taking a hedge short position, guys, $100,000 if we get it. If we don't get it, we have to look at different levels. Now, let me quickly backtrack. We're actually on support right now, guys. So there is, like I've said multiple times, a trade at 94K. I might get stopped out on stream on this trade. If this goes below this blue box, which you can see, which is drawn on by my indicator AI charting tools, if it goes below this and it closes, it's over. That trade is now out, and I do believe 88K is the next level, and then 74K, and I'll show you those levels in a minute. If we lose this wick decisively, I will get stopped out on that long. And I've been very open and on. I've been showing everyone that trade in my VIP group. So you can go over here, guys, into my VIP. You can see I've been talking about this setup for a while and speaking about everything what I'm doing with this specific trade. It went into some decent profit, but I didn't take any profit from it at the beginning. Peter, you look so good today, by the way. I never said hello. How are you, brother? Are you okay, my friend?
Yeah, pretty good, mate.
You're looking good, man.
Just worrying about this old bear market, you know?
Bit worried, yeah? What we're going to do... Well, the thing is, it's not a bear market yet because we have only got one decided factor, and that's the 200-day moving average, which we're below. Everything else, even the volume's not looking at the... Okay, we're doing it right now. The volume is not on par with a bear market, and structure, systemic structure isn't broken, even though we have broken the lower time frame structure. PT, yeah, someone in the chat. So let me just quickly tell you what happened last week, just to recap exactly. So I was saying, if we lose this wick, which we did, and actually we did have a little bit of a bounce off it, which was good to see, SR trading. I said it's very likely if we lose this wick, we're going to go down to 94K. Specifically said that on my prior stream. I said 94K is the next level of support, and we've literally, like clockwork, come down, and we've been fanning around 94K. One bounce off 94, another bounce off 94. Now we're retesting it again. You know, it's a third hit, so every single time you hit a resistance or support level, the more times you keep retesting it, the weaker it becomes. It's like smashing with a hammer. I've used that analogy many, many times. So you've had one smash, and you're on a third smash now. So the more smashes you get, probably the closer you are to it breaking. And if we do break this, guys, we're going to 88K quite quickly, and then we're going to go to 74K if we lose that. And then I would say it's very likely, actually, that we're probably going to go into some sort of bear market. We just lost you. Oh, here we go. Sailor, here we go. Strategy behind the... Yeah,
we'll go. Market, brother.
we'll go into this in a minute. Sailor's an investor, a long-term investor, so he's not a trader. So he's not actually looking at whether the price is going to go into a bull or bear cycle. He'll just use the excuse of, oh, it's going up, so now we're making money. Oh, it's going down, so we're going to buy to make more money. He's an investor, long-term investor. So he's not like me or people who look at price charts. I would call myself, guys, like, as we know, a price chart trader. Price action, PA, price action trader, technical analysis before fundamental analysis. Sailor is a fundamental guy. I'm a technical guy. Even though you can you can go in and out of fundamental analysis, of course, because I do buy things as investments as well. Anyway, so guys, so this is just to recap one level further, because I've had a few DMs of people saying, but you said it wasn't going to go down, it's only going to go up and all these kind of things. I said this from the very beginning, guys. We had a break here, and I do think the probability is that Bitcoin will rise and actually break the all-time high. I still do hold true to that statement. I still do think Bitcoin will break the all-time high at some point before we go into a bear market right now, because we've only lost one factor of being in a bear market. I will hedge against, and then because what I'm saying is my analysis and my trades are two different things. We'll go into that in a second. So the first thing I said, guys, was big crash. We likely come up to the 786. I thought we were going to get the 786, but we got the 618 weakness. We actually got a lot of short opportunities on the way down. But I said if we lose this wick, guys, it's very likely we're going to go down. We actually literally just tagged support in here. So this indicator, guys, is called AI charting tools. It's plotting on all the levels for you. I've taken a trade on the basis of that indicator. Now, I said if we lose the wick low, guys, it's very likely we're going to go down to 94K. That's where we are right now. Altcoins season is not happening, guys. I just saw in the chat someone write altcoin season. Not going to happen. But anyway, this level, guys, is very important. We've lost it. And I said if we do lose the wick decisive, we're going to go to 94. That's where we are, okay? So let's go back to the things I was talking about. Are we in a bear market? Now, the 200-day moving average, we are below it. So that would say, okay, that's one thing. Is the 200-day moving average moving down yet? Not yet, but very close, okay? And the 200-day moving average over the course of the next few weeks will begin to aim down. And like I just showed you on the charts, it's quite likely, guys, in the same way when Bitcoin comes down to support, when the moving average of 200-day moving average is moving up, it very likely bounces off it and goes up. It's the same for when it's going down. So if it's aiming down and we come up to it, it's actually quite likely, guys, that we're going to continue going down because the average price of the market over 200 days is falling. Obviously, the scenario, the analogy, sorry, the situation and what, bro? The situation and scenario, 2 S's, was here where I was talking about when the 200-day moving average actually was aiming down. So we broke the 200-day moving average here, legends. Bada bing, bada bong. Then it was aiming down, and we saw it as a resistance. And actually, that did call the beginning of a significant bear market. Because in this specific scenario, there's so many S's today, isn't there? Scenarios, fucking situations, specifics, fucking suck. That. SSS. So if you had had this drawdown here, legends, you still had a higher low on the macro. So this, you couldn't have said it was a bear market yet. It was when we saw resistance on the 200-day moving average. And actually, another great indicator here was when the dealers got short. I remember I did a video about this saying, get your stop losses in, because the dealers from the CME Chicago Mercantile Exchange started shorting here. Anyway, and what I'm trying to say to you here is like, if the 200-day moving average is going down, you see resistance. Here, you can see it's going up. We came up to it, and we broke above it. So it's really crucial which way the 200-day moving average is aiming. Another great example here, guys, is we broke the 200-day moving average, saw it as resistance. This was going up. The second time was the confirmation. Okay, so we had it break through, and we saw it as resistance again, aiming down. And that was the big fucking move anyway. We literally dropped all the way down to $3,000. So on the basis of those 2 prior situations, scenario situations synergizing together, you can see that the 200-day moving average was going up. We continued up. The 200-day moving average was aiming up. We're still going up. The 200-day moving average is now doing something that is slightly different to the past. And this is a weekly timescale we're on. We're getting to a point now, guys, that it is beginning to arc over. So on the basis of that alone, I will take a hedge short when we get to the 200-day moving average. But I'll make it even more simple for you guys. It's going to be at $100,000 because this is going to go like that. We're going to rally back up quite likely. And we're going to see $100,000 in here. And it's actually bang on even in this resistance here. This is actually 105K. 100K is the wick. So really, guys, you've got a short position here, and I would say even here as well. For 2 hedge short positions, the 200-day moving average will be aiming down by then. So you have 3 opportunities here for a hedge short position against your portfolio. And the only way you do a short position, guys, is if you're hedging against your already bought spot portfolio, because you don't want to be constantly going in and out completely on your specific example. For this specific scenario, synergized together, S's, S's, S's. With this example, this is a Bitcoin trade. So with this, you want to have spot. You want to hedge against your spot portfolio against what's long, because spot portfolio is long, and then look for those shorts on the way down. So that's one thing. One thing we don't have just yet, we don't have any systemic structure break, because and a lot of guys are umming and ahhing about this, and everyone's calling this, oh my God, like everyone's fucking subjective with their levels. You have to come into play. This is a low, this is a low, this is a low, this is a low. Okay? I wouldn't count this here as the macro low. Simply put, we went below the 200-day moving average here, we went below the 200-day moving average here, we went below the 200-day moving average here, So we're below the 200-day moving average now. This is really the next big swing level for me, okay? So a lot of people would say, no, we lost this wick, now it's over, now this is actually the swing, and we're in a downtrend. On the lower time frame, sure, we're on a downtrend. But on the higher time frames, I'm not seeing that. This is still an uptrending market. If we hold above 74K, it's still an uptrending market, okay? It doesn't mean that we're getting closer to... I do think we're getting closer to potentially this being a bear market, because we have lost the 200-day, and the 200-day is moving down. But everyone's umming and ahhing about the levels, and from my traditional look at the market, it's been trading for over a decade, I would say from what I look at, and guys, it is a little bit subjective, because there are a lot of people saying, no, this is it. This is the swing. This is the swing. Everyone's talking about these being the swings. No. That's like saying that the move in here, for instance, up, that would be the macro swing. No. That's not a macro swing. This is lower down macro swings. The big fucking swings on the weekly. Here, 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 here. It'd be like calling that a macro low. It's just not. It's simply put not. So here and here, I think where we're looking now is the next where we're going to see the low. My point is this. If we're above $74,000, you have to take at least 33% out of the equation of us being in a bear market. The first 33% is the 200-day moving average, and if we're below it and if it's aiming that way, right now, I'll give it this. I would say actually 33% chance we're in a bear market right now. just on the base of the 200-day moving average. It's coming round. It's arcing, almost aiming down. I will take a hedge short on the basis of that, 100%. So when we go to the 200-day moving average, I will take a hedge short on the basis of that, where if it's aiming down. And that will very likely coincide with the 100K. So I'm looking to short 100,000, maybe up to 105, depending on where the 200-day moving average. 100%, 33% chance. I'll take that hedged bet. Hedge short, 1% stop loss above the next high. That's logical, guys. That's what you should do. If you've got a 33% chance of a bear market starting and you have an opportunity to sell a level that's been in history in the past multiple times has played out, you got to take that trade. But risk management is 1 to 2% loss. So you have your stop losses all the way up here, just in case we continue and we continue up, okay? Pete, can you mute yourself a second? I keep getting little mouse clicks. But yeah, obviously unmute yourself if you want to speak. And the next part, guys, is volume. Because volume, to be honest, it has actually been a little bit more in favor. This is a big red node. This happened actually a few weeks ago. It's nothing in comparison to our prior cycles. And that's something which is slightly off. You know, I would say that continuing to look at this analysis and say, is the volume of Bitcoin increasing or decreasing over time? You would say the volume of Bitcoin is going to increase as the market size grows. But you can see we had a massive red node here that actually did end up resulting in a bear market. Huge, massive red node here that actually did result in a big bear market. We haven't had anything in terms of massive increase in volume in the big red node, even though you do have this here, which in comparison to everything else, if you look at the market the last year, the highest volume node is sell pressure. It's not a good look. If you're in a bull market, you want to see the highest sell buy node be buy pressure for a bull market. And you can see this here. Massive, massive green candle, massive expansion. Massive red candle, fucking nuke. It kind of dictates what's the biggest volume node. If it's buy pressure, likely going to continue up. If it's sell pressure, likely going to go down. We've seen that multiple times in Bitcoin's history. Huge sell node. It actually did result in the price rising a bit more, but then it ended up falling down. But we had that huge area of pocket of, because you wouldn't have had all of this here. This was before, this massive green node, I hope you can see that, was before this all happened. So massive green node, which wiped out all this, increase in volume. Everyone started selling actually a little bit early, and then it actually resulted in a bear market. But we haven't really got that this time around, guys. So the volume, you know, isn't articulating what you would want to see exactly for the crescendo of a bull market with increasing buy volume and then the big sell. And hopefully everything's looking good on this end. I've got my new light in front of me. I hope you like it, guys. My new little studio light. Let me just turn this on. So I would say that it's about a 33% chance, guys. I'm not going to go by the basis of this volume. I haven't got any significant red node yet, even though you could say that's more than anything else in this area. There's been a lot of people coming out saying a lot of whales are selling. You know, I have a thing called whale bubbles, which you can put on your chart. I wouldn't use that as analysis because, you know, a whale is just someone who holds a lot of Bitcoin. Like, it doesn't necessarily mean they have any inside knowledge or they know anything more or they're trading in any way. They could just be a long-term investor and they could be selling it on OTC. So I don't use that as I can't quantify that in my analysis. I would say 33% chance. Now the trades, legends. Let's get into the trades, because guess what? On this channel, I talk about what I think, but I also, it's like a good analogy would be nobody said they were going to vote for Trump, but they all did. It's the same thing in trading. It's like analysis is one part of the story, which you can say stuff, but actually what you do and where you put your money and where you trade is another whole kettle of fish. And you can be a great analyst, a very bad trader. You can be a very good trader and a very bad analyst. Literally, sometimes actually it kind of works in that way. That you see people who are great traders, but when they fucking tell you what they think is going to happen, it's all bollocks. You're like, what? But then they just play the levels and trade and they actually make money. So, and also analysts, like for instance, people who they all look good on the charts and everything looks sexy and all their colors look nice. Sometimes their money's all over the place. So I would say in terms of the flat trades, guys, like I've said, I already posted all of my trades in the group, in my VIP group, and that was 94K. I'm probably going to get stopped out on that trade. Looking at this chart on the weekly, it's probably going to get stopped out. So the first trade I've said for the beginning of time, guys, was 94,000. We've had 3 attempts, and actually we're blasting through support levels now. So the first level here is that's where my execution happened of my trade. It did go into profit, and I set my stop loss. Okay, my stop loss has actually almost got stopped out by around an inch. It might even be stopped out now. If this goes below here, it will get stopped out, but that's fine. That's a trade. So 94, we've had a couple of attempts here, but the more times you hit that support region, the more likely it is to break. So we're seeing right now 190, 94, 94, 94 into this blue pocket, which is where support is. And ultimately, we're seeing buyers stepping in. Like, buyers are trying to step in here. It's just they're getting a lot of sell pressure on top of that, okay? Now, if we lose 94, guys, 88K. I don't really see anything else until 88. We're going to look at probably the tops of the swings here. So I'll draw it on for you actually right now because I haven't got it on this chart. It's going to be around here, guys. This will I'm not going to draw it all the way across, but 88K is quite likely going to get something. And then that's another bounce trade. So guys, if you come to 88, you look to buy the market, because when you buy the market on the way down at a relevant support region, you have the chance of high RR of the price rising. If we actually do get 88 and you get a buy-in and we go all the way to 100K, that's going to be one of the best places you can be. If you can get a good long from 88 and then you're coming up to $100,000 and you do a significant hedge short, and I will do quite a significant hedge short at 100,000. And also, so there's two dependent variables here: where the 200-day moving average is and how fast we get to $100,000. So if it takes us months to get to 100K, it's a different situation to if we come down here, we rally up very quickly, and then the 200-day moving average acts as a resistance as well. It's two different postures, and it's two different scenarios, and two different outcomes will very likely happen, okay? So what I'm saying is that I'm saying a bounce trade up. If we get a quick move, so for instance, down here, quick move back up. If we come down to, it might happen now, so we could get the reversal now. But if it's 88 and you get a quick move back up to 100K with the 200-day moving average bang on it and the 200-day moving average is aiming down, that there is where you hedge short, and then you leave your long open, you leave this short open, and then you just fucking wait, guys, okay? And then you're a very, very good position, because the market's likely going to be range bound for a while, and it's going to result in up or down. But guess what? You're in from both of support and resistance, so you've essentially played chess against the market. You're hedged on both sides, and then all you wait for, guys, is the stop loss on either one to get stopped out. Look, and I've heard this before happen, obviously. This has happened to me before. Sometimes the market will stop you out on the high and then stop you out on the low and then do the thing which you don't. Like, that can happen as well. But we're not here to try and get every single trade perfectly. We are just trying to put money into the market to potentially, with a high probability, make money long term. That can happen, but I'm saying when you do that, you're in a much fucking stronger position than some noob who's just spot buy, or let's just say leverage buying 100x on either side. So he's like 100x long, 100x long, 100x short, 100x long, 100x short. That's fucking stupid. We know that because you can't make money. So I'm saying this is a really, really good situation. If you see that situation play out, it's a really good situation for you if you're going to trade in a way which makes sense, okay? Now, so 88K is a buy, and then 74 is one of the best buys you're going to get. Not saying that it necessarily has to break the all-time high, guys. I'm just saying that 74K is a very, very high probability of at least getting some bounce. So it might be 1%, it might be 10%, it might be 20%. It might be any of those percents. But I'm just saying that the probability of it coming to 74 and then going up from that price is very high. So it means that you're quite likely going to make money. It doesn't mean it has to go and fucking break the all-time high and keep going. I'm not saying that. I'm just saying that the price is very likely to rise. You can get into a position that goes positive and then bring your stop loss up. And then if it wants to belly over, all of those people, guys, everyone's going to buy 74. And there's going to be a lot of stop losses just underneath that level. Okay? So if it does rally and it's weak, bet your bottom dollar, you put your fucking stop at break even like everybody else in this fucking planet, and then it's really going to go. You're going to get a really big crash. But I would say I would say the probability of you getting that all in one go is quite unlikely. So doesn't mean it's impossible, but I'm saying 74 is very likely going to get a very nice bounce. So what I'm saying is, guys, 74, draw it on the chart, 88. This looks great, doesn't it? 94 right now is a buy, but I bought it fucking already, and it's getting retested multiple times. So it's getting weaker, 94. And then, yeah, we've got 88 and 74. Those are the two next big bounce trades, okay? If we don't get both of those bounce trades, guys, it's anyone's guess where we're going to go in the next level, okay? It really is, because you're going to get a very quick probably liquidation, stop loss event, might even look something like the SUI chart. I'm not even joking, and that would be Bitcoin. And it's very difficult to predict outside of the next range where you're going to go. Yeah, you can kind of look at the levels in this range to then say, oh, we're going to go exactly to these levels in this range after losing all those. And then it's going to get hysterical. There'll be a lot of crazy shit. There'll be a lot of market smashing either or. So I would say that it really is kind of down to the elements here in terms of what's going to happen. I would just say that there are a few levels I've got defined. You have the low wick, you have the mid-range, and you have a few... All the yellow lines, guys, are basically where it potentially could happen, and it really does correlate with the prior market cycle. But again, you're going back so far that really, if it's relevant, the longer something goes... So let's just say this is the way I would tell you if you're a beginner. The further back the area is of the price action, which is articulating support or resistance, the further it goes back in time, the less relevant it becomes, because there's less orders in the order book on that level. Because obviously, if you look back 10 years, it's like, well, how many people are holding their position for 10 years? Not very often. It will act as visual, and that can have a self-fulfilling prophecy effect. But I'm saying that most likely, it won't be as relevant if it goes back multiple cycles. I still think this will be relevant, by the way, guys. In this example for Bitcoin, these levels will still be relevant because people can hold positions for definitely years just in Bitcoin. I literally know people who've held underwater positions for years. And it is hard to watch in some cases. But anyway, so let me recap all the levels because I think it's really important. I'll tell you again what my analysis is, but this is where my trades are. So 94 right now, I've already told you that I've already had a few positions, which have happened. I've already bought this area. I'm probably going to get stopped out on this trade. You guys can, in my VIP group, you can see, we had a few moves up. It went into profit. It's probably going to get stopped out. The next level's 88. I will be buying $88,000 for potentially the bounce trade. So we either get it here, 88 or 74. All of these levels are very, very good logical places to look for buy trades for the bounce. Whether they, actually end up being the thing which brings us back to $100,000, who knows? But one of these levels, quite likely going to get it. Then Legends, the 200-day moving average is coming down, and 100. Okay, so the level's on the way back up. So if it happens now, definitely taking a short at 100K. If we go even lower, that's going to even be, the 100K mark might begin to fall because the 200-day moving average is really what I'm trying to target here. But I would say anywhere along that 200-day moving average is going to be a short, depending on where it goes. Okay, so there'll be a short on that 200-day. But if it does correlate with $100,000, so let's just say the 200-day moving average is on the 100K mark, which is actually a little bit lower, so it's actually here. But let's just say the 200-day moving average is coming down, the 100K mark, they correlate together. That's going to be a nice confluence trade there as well. So I'd say that's high probability. But volume's not stacking up. This is the real level, guys. A lot of people are saying, no, it's not. The wick's now the level, and this is the level, and da-da-da. If you look at this chart, you would say low swing, medium, and the way up. That's not one. That is, though. So the levels are here, 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 here. And then if it does hold between here and 88 or even 74, in the long run, guys, let's just say Bitcoin did do this and then broke $100,000, you would just look at that as the next macro swing low. Okay? So this is not off the cards. It's not 100% bear market right now because I think it's only a 33% chance that we're in a bear market from the three variants that I use, which is volume, structure, and the 200-day moving average. So, and guys, I have actually in that way of looking at what a bear market is, and obviously a bull market as well. There are some other small nuanced factors which I look at, and some of those things are long to short ratio. Obviously, you guys know from my product line, I have the long to short ratio. If I go on the daily time frame, I'll just quickly show you a pretty interesting thing about this. And I had a call with my team earlier. Well, it wasn't the full team. It was just in one of my VIP live streams. So what you can see here, Legends, is this is on the daily time frame. Usually, okay, the two ways you use this indicator, and anyone can get access to this, is on mdxalgo.com. So the two things you're looking for is when does the long to short ratio cross? So when are the crosses on the chart? These are when you want to start looking at the price. When the long to short ratio crosses, and this is using top traders and the retail traders of Binance. So the exchange with the highest volume and open interest is taking data from that exchange. When these things cross, it's time to start looking at what the price is doing, because usually you do get a switch. If the price is rising, it might start falling. If the price is falling, it might start rising when you get a switch. There's also the analysis of looking at it. Which way are the lines aiming? Are they aiming up or are they aiming down? That's similar to the 200-day moving average. I'll give you a good example. If you zoom out on this, let me just double click that so it makes it. So you can see here, guys, net longs. Just so you, another thing you know is that we've had most of the market has been long for the last 3 weeks. The price has been falling. So if people are more long, the price is usually going down. If people are more short, the price is usually going up, because the price of the market usually goes against what the majority are doing. And that happens on all markets across every single asset class. And that's just because if you're in a long position and you get stopped out, you're forced to sell. Also, the majority are usually wrong. And the synergy between those two things, the majority always being wrong. And if you're long, then you get stopped out. You are forced to sell. It's people being forced to sell by longs getting liquidated and stopped out. And that actually can cause very big cascades. So here's a good example, though, where if you have the longs falling and the shorts rising, you can have moves up within longer term movements down. And that's because the longer short ratio isn't just about who's most long and who's most short. It's also about, there's still, just because there's more longs doesn't mean there's still no shorts. There's still fuel for the price to go the other way. It's just there's less fuel. But it doesn't mean that fuel on the left side can't be used. And also, guys, just to make a complete point here, is that not every indicator is always going to give you the results you want. These things, we're talking about a chaotic price market determined by millions of people clicking a red and green button over the globe. So, this is complete chaos, but we just look for patterns. So, yeah, I'm saying that can happen. And then if genuinely the price, if you genuinely have more longs in the market, the price is usually falling. And if there's generally more shorts, the price is usually rising. But in this case, you can see here that we've got more longs in the market, the price is falling. So everyone's fucking long right now. Even top traders on Binance are fucking long, which is not a good look for the price turning around just yet. What you want to see at least, which we're not even getting this, and by the way, you can get this on mdxalgo.com, my website. We're not even seeing the longs falling. If we start seeing, here was a good example, the longs start falling, the price had a little bit of a pop. We really want to see, guys, for the bulls, is the longs to start falling at least, the shorts to start rising at least. Then we'd probably have this happening, a little bit like that, and it might be coming up to resistance, and then we're looking for the high low. When they then cross, that's quite likely when the resulting move happens, in synergy with that. But we're not getting any of that right now. We're actually increasing longs now, which is not a good look. And that's because everyone's trying to buy fucking 94 support. And that we know that doesn't bode well. Because if everyone's buying the same level, usually the level's going to fucking break because there's too much fuel for us to fall. So there's a lot of stuff happening here, guys. I'm not even going to bother with altcoins. Everyone's going to shout altcoins in the chat. But, I'll quickly look at Total 2. I was looking at it with my indicator earlier. Total 2 is not a good look. It hasn't actually broken any long-term structure, so it's quite similar to Bitcoin. But I think the chart which really gives it actually away. And I've been saying this for a while, guys. Complete clean chart. I said from the beginning, guys, when we came down here, I think we're going to rally up. And we're likely going to probably take 6 months to get to these highs. I said it could pop up above it, but it's unlikely. And then I said it's likely to rally up, and then we're going to get back down, and we're going to do this. I said that you can go look at my videos, guys. I was saying we're going to do a pattern like this for literally, I've been saying this for over a year for Ethereum. You can go look at my videos. I've been saying that we're going to do some sort of pattern like this. And Ethereum, yeah, we're going to very likely go 618, maybe 786. But when Ethereum eventually, it's quite likely going to find support between here and here. When it then does its next leg up like that, that's when you're going to see a mini alt season probably occur. But if Ethereum's falling, it's very unlikely going to get an alt season. And also Bitcoin's falling as well. So that's even worse for Ethereum. Because you've got to remember, if you trade ETH, you've got to trade Bitcoin first. We're getting a little bit of support here, guys. Right on support. That's good to see. But yeah, so all these guys who are screaming for, I saw a tweet earlier, and it was like, now the top is in for Bitcoin. Now you need to do this. That's extremely dangerous talk right there. Because there is no guarantee that the top is in. We are literally only just losing the 200-day moving average. We're still above 74K, and volume hasn't even been giving us any signs that we finished the bull market. Another this is actually the stock market. And the funny thing is, guys, I actually wrote this tweet and put the Trump bubble just because I think that the media are going to use the crash in the stock market against Trump. That's what I think is going to happen. But in the prior one I made, I did write the AI bubble, and that was 3 weeks ago. And now everyone's typing in AI bubble into Google. Like, the search terms have gone absolutely crazy. So the legitimate reason for this happening is probably actually nothing to do with Trump and nothing to do with AI. Because AI has been building up since fucking COVID times. Like, we had AI coming in, everyone talking about it. I don't think actually this move is... I'm going kind of jumping around here. I'm talking about the stock market here. They're going to blame the stock market crash in the next 2 years on Trump. But it's actually nothing to do with Trump, and it's nothing to do with AI. This whole thing has been happening since COVID, and we've known that COVID and all these types of things have been actually a factor for this. People have been diving into the stock market to hedge against inflation, etc. Anyway, so I was going to speak about the CBBI. This is another thing which it's not a good look, really, but it hasn't hit 98. So, you know, this is another thing in my mind, which is saying that it's quite unlikely, actually. You can't say it's 100% the bear market has begun. I would say 33%. That's not nothing, but it's also not saying the top is in. So this is not a good look in terms of if you're a bear, this is not a good chart for you. If you're a bull, it's a bit more of a tick, because there's never been a cycle top where we haven't got above 98. It could be this cycle, of course. I'm just saying that this never happened before. Even the PI top cycles, it hasn't crossed. I think the PI top cycle is in here somewhere. Yeah, so 52% of the way there. We're only halfway there. So, having said one thing, we are, if you want to chart this specifically, you did have, like, let's just call it a bearish divergence in our prior cycle. So we had the top of the CBBI at 98. It went all the way to 100, basically. And then it had another go. The price actually went higher, but the CBI went lower. So that is a bearish divergence on this specific indicator. Right now, we're at the support level on the CBBI as well. So between here and 88 is quite crucial for the CBBI as well. If you're looking at it in terms of, we're making high highs and high lows, blah, 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 all that shit. So the CBI is not gone to 98, which is good for bulls. But if we do lose here at 62, it's kind of broken its nice arcing up structure. And I think Bitcoin has fallen quite significantly, actually. Oh no, we haven't actually moved at all. But that's probably because it was the start of the week. But the difference between Bitcoin, we had a $2.1 trillion market cap for Bitcoin. Now we're trading at 1.88. So it's a pretty significant difference in terms of, we were kind of rivaling Amazon at one point. But yeah, it's a $1.8 trillion market, guys. And gold is held very strong, and now is literally 20 times the size of Bitcoin. Which obviously over a long period of time, Bitcoin's been catching up with gold. But in the short term, the last 6 months, gold has been actually racing ahead. But we could talk about gold briefly. We've already spoken about this. You know, I think I won't go into gold too much because Bitcoin's more of the topic right now. But I've said very, very clearly that, guys, I do think that the bear market for gold is going to start when we hit here. And these are pretty decent signs of gold stopping. We have two very large wicks, bigger wicks than anything you can see here at the top at 2011 levels of purchasing power. So if gold wants to begin to move down, and we're going to get a stock market crash in the next 2 years, Bitcoin's 33% chance for a bear market. We're getting close to the bear market, guys, for sure. I'm not sold that this is it yet. If we, what would really solidify in my mind that this is now the beginning of a bear market for Bitcoin would be this. This would be the worst case scenario. If we just flushed all the way to 74, and then we rallied up, and we just started having a really weak rally, like up to here, then down again, then up to here, then down again, then we hit like 100K, and the 200-day moving average was here, then there would be like, very likely we're going to see some sort of, and then everyone will be calling for the Wanger formation. There'll be the fucking, it'll be the Wanger formation on steroids, and that actually in technical terms would be called head and shoulders. But we know head and shoulders are fucking memes in crypto. They hardly play out on traditional, let alone crypto. So if you're fucking drawing head and shoulders and Wanger patterns all over the gaff, you're not going to make any money. Anyway, so this would be the worst case scenario. right down to 74, and then we rally back up on a weak rally. If it went to 74 and then we jetted up very quickly, that would be a better sign, because the posture is very important for Bitcoin. And any market structure has posture involved. The way you get to the price is just as important as the price itself. And that's very, very difficult for new traders to understand, because it's like you don't have the experience. The posture is like super important. Any big long-term trader who I know who's been successful for a long time, they usually don't even look at the fucking number. They just look at the structure before it gets there. It's very telling. And then, guys, the best case scenario for Bitcoin is we find support exactly on 94. We have 94, 88, and 74. They're the three levels you look for bounce trades. The best case scenario for Bitcoin right now is we hold 94. We go up to 100K very quickly. Maybe we see resistance on it once, because I do think we're going to get around here, probably between 100 and 110, depending on how fast you get there. There's going to be a head short. I'm going to be taking a head short. But then we find a higher low and we break above it very decisively, very quickly, and then actually see it as support. You know, we break it and you see it as support. That would be the most bullish scenario. And I don't like using bullish and bearish, you know that, but I would say that would be the best case scenario for the Bitcoin legends out there. But just to recap before we get into the news of Pete, if you guys have any questions about Bitcoin specifically, ask me now. I'm going to continue a little bit more analysis on Bitcoin, because I do think it's important. Like Bitcoin, I just want to get it clear to everyone out there who's watching this video about the bear market situation. Everyone's calling for a bear market. Everyone thinks it's over. I'm just giving you the exact numbers of what I look at. And just to completely recap one more time, the 200-day moving average, right now, we obviously below it. If the 200-day moving average begins to fall like this, you're going to short the 200-day moving average wherever it comes, okay? Wherever it comes to, you short the 200-day moving average, okay? From any support region when you get into your longs. If it's falling, that is one thing. That's 33% chance that we're in a bear market, and we're almost there. You could even probably call it, because if we stay here for another week, that will be it, 33%. Structure is not broken yet. You know, if we went down here, you could say that we're getting closer to the next 33%. But if we lose 74 and then we're below the 200-day, we're at fucking 66% chance. And then volume will quite likely just peter off. And if we start seeing volume beginning to fall, bear market time. But this is super important. The 200-day movement is super important. But that's my analysis. The way you trade against this, which I will do myself, is I will look to buy 94, 88, 74, and I will look to hedge short. Again, and this is another scenario I haven't actually mentioned. Let's just say we go to 74 now. There is also short positions on the prior areas we broke. So 88 would be a head short, 94 would be a head short, and also 100K would be a head short, and the 200-day moving average. So all of those on the way up are hedge short positions as well, potentials. I would just say that the real crucial one, if you get it, is $100,000 in here with the 200-day moving average. That's going to be a real nice trade if you get that. But ultimately, guys, like you're buying all the support on the way down, because we are breaking the 200-day moving average quite significantly. That means it's a 33% chance of going into a bear market, which means you do need to appropriately hedge against that, because that 33% can happen. In the same way, it's like you go and look at an altcoin, you're like, this probably got a 50% chance of rallying. You still buy some because it could do it. There's a 50% chance, so fuck it, buy it. And you have to go through your own analysis. It's the same way. If Bitcoin, in my book, I think there's a 33% chance of going into a bear market. So you should trade accordingly on the basis of that. And you should say, if it rallies up to certain levels that look like support, resistance in this case, and your analysis is telling you that, okay, well, we're at the 200-day, we're at 100K, it's SR, you're looking at SR levels, then place trades on the basis of that. And this is the first move, guys. It's the first move down. People are right to say at this point that we are in a downtrend. We are in a downtrend. I want to show you actually another interesting piece of analysis before we go on. So this is a downtrend. You have the high, a low, a lower high, a lower low. Now we're probably going to end up getting a lower high, you know? So next one. So we're in a downtrend for sure for Bitcoin. We're at support and we're in a downtrend. One thing I want to mention as well is that if you average out in this bull market cycle, every swing high to every swing low, and let me just define those levels. Swing low, swing low, swing low, swing low. Might get swing low now. Swing high, swing high, swing high, swing high. Okay? So that would be looking at my I would call this objective analysis, guys. Like there is a little bit of subjectivity in here, but people calling for this and calling for this and calling for this as macro swings are wrong in a very, like, just objectively they're wrong. Okay, so this is what you're looking at from the chart. If you take every single swing high to swing low, that there 24%. This one here is going to delete the prior. That was actually a swing down of 33%. And this here also, I'm going to do this rough because I did all the calculations earlier, 32%. At the moment, we're at 26%. So the first one's a little bit in the middle, but 32 and 32%, and this was around 26. So if you kind of aggregate it together, it's around 30%. So as of this point, and let me get it a little bit more exact for you. At this point, guys, for the price of Bitcoin, we've fallen about 26%. So we've had multiple times in this cycle, specifically this bull market cycle, where the price has fallen 32%, 33%-ish, and we still continued to rally. So that in itself, that would say to you that you can't rule out the possibility of a bear market, but you can't 100% say it's a bear market. You can't say the top is in, and anyone else is shouting that the top is in are the guys who were shouting that the top was in here, and the top was in here, and the top was in here. And every single time, guys, I was saying, no, you buy, you're long until proven otherwise, you buy, you're long until proven otherwise. And at the moment, I'm still, you buy until long until proven otherwise. I would just say there are a few factors that are saying that potentially this could be it. 33% chance. But the same people who were calling for tops here and tops here and tops here, when I was calling explicitly on this channel to buy support levels, especially in this move here. All right, this was the big move which wrecked all of those noob traders, like, you know, the fucking, what was his name again? Soloway with the stupid haircut. These guys got nuked out of this completely. I was like, guys, no shorts available, long until proven otherwise, long until proven otherwise, long until proven otherwise. And as traders, just as a psychological and do the philosophy at the end of being a swing trader, I'm a price action swing trader. What you want to do is you want to buy, you want to go with the market swing, and you want to be right until you get proven by the market wrong. You don't want to try and prove to the market that you're right. You want to go with the swing, go with the price. Your job is to make money. You don't have to fucking die on the hill with your predictions. Your analysis and your trades are two different things. You can analyze as much as you want. It doesn't mean you don't do the exact opposite by your trades. And that's why they can be great analysts and great traders, and sometimes they don't even fucking coexist. You have people who are shit analysts, great traders, shit analysts. It's the same fucking person. What I'm trying to say is that you don't marry your bags. You long with the market as you should until you're proven wrong. And I would say right now, guys, that you're still long until proven otherwise. I would just say that it's a 33% higher chance than this scenario and obviously the beginning. This was very, very risky because it was the beginning. But that first one, when we found the 200-day moving average moving up on support, so it's a slightly less probability of this being another move up. But I will stick to my word and say this. From what I'm saying, 33% chance is not 100% chance we're in a bear market. I would say that it's quite likely, actually, we still do break the all-time high and continue up. I think it's still quite likely. We have a few things, like this chart is another chart which I was showing to a friend earlier. You can't see the yellow line here, but I've had this drawn on for a long time. And actually, it articulates all the levels. So even if you take this off, if we take off AI charting tools, these levels are pretty fucking good already about where support is. If you whack on AI charting tools, it gets a few levels actually which are pretty important, like that 85 to 88k region, very important. You got the highs of the prior swing 2 swings ago. Obviously 76 that 74 correlates with that high, so it makes it even more strong. You have up here, guys, in the 110k region, then obviously you got $100,000 in here. And if you draw the 200-day on this, let me just quickly whip it up then, just so it's another chart I was showing someone earlier. Whack on your 200-day, you can see that this is quite likely going to come around like that. You're going to get some nice trades in here as well. But last time I'm going to go through it, guys, just because I think it's really important, is we're at support right now. Like I said, I'm in a trade. Let me see if I got stopped out. Did I get stopped out on this? I haven't actually been stopped out yet because this is on Binance. This is the price coming from Binance. So if it had have gone below this wick to around, yeah, it's not stopped out yet. So I'm still in this long from 94. So just to completely go, 94 guys, support, 88, I think we're going to stop. And AI charting tools is bang on with that area in there. And then obviously 74. They're all bounce trades. Those are the levels. You short every single pump. Okay, that's what I'm telling you right now, guys. You hedge short every single pump now. Okay, 33% chance that we're going into a bear market. You short every single pump. That's what you do. You don't short the whole fucking farm on it. If it's a 33% chance to go into a bear market, appropriately risk from your portfolio a certain amount. Don't risk 33% of it though. So don't take it's a 33% chance to us go into a bear market. So now I'm going to have a trade which is 30% risk. That's not what I'm saying. I'm saying take a hedge short position on the basis of losing 1% on the next move up. So good example will be let's say we find support, we come up here to $100,000. The 200-day moving average is going round. You hedge short, depending on what leverage is fine, and then you have a 1 to 2% stop loss above it. So if we do, so say your stop loss is above here and here, if we do continue up, you get stopped out on the hedge short position. But guess what? Because you're hedging against your spot portfolio, which you should be doing, guys, your spot portfolio is going up in price. So you're essentially making back the 1% loss from the hedge short position that's getting stopped out, exactly the same way as if you're laddering into a trade on the way down, you get stopped out at 1% for potential chance of continuation. And then, guys, yeah, the shorts, depending on how far we go, I can't go through every single scenario. I'll be here all night. I'm just saying you can go all the way to 74. If you do that, you are shorting 88. You are shorting 94. You are shorting 100. All of them. If you go to, let me get my 88 line back up. No, you bastard. Let me get my 88 line. So, yeah. And then if you short at 100, 100%, but obviously you can't short now because you haven't broken it. So if you go to 88 and back up, then you do short. So you're looking to short every single pump, hedge short positions on spot. Ultimately, 33% chance we're going to go into a bear market. I do think, though, the 200-day will be a short as well. But buy, flip, short. Can't short the bottom, obviously, but yeah, and that's kind of the analysis you're looking at. And to go to the higher time frames, CBI is not there yet. Let's have a look at the fear and greed index on the stock market. So at the moment, everyone's extremely fearful on the stock market, which is hilarious because the stock market is it's hilarious that everyone's scared now because we're going to get the big crash. It's going to happen probably within the next 2 years, but having it fearful now is not a good look. It's not like people are always scared before it happens. They're usually euphoric before it happens. So I would say, again, we've still got 2 years, I think. I'm just saying, from 2026, the beginning of, to the end of 2027, beginning of 28. I think that period is when we're going to get a very, very severe stock market crash. And I actually drew a chart. I could probably find it on Twitter, but I drew a line here. I drew a line there and I said, guys, it's very likely that the stock market's going to come and retest this high during the COVID highs at some point. We got it bang on. Go on my Twitter and scroll back. You'll see that prediction. I literally said, guys, we're very likely going to get a retest of this high. We got it to the nail. So now I'm saying to you right now, legends, that it's going to be something like this. It's going to be a severe bear market for the stock market, for sure. We are at .com fucking levels. There's no prior history of us getting this high in terms of purchasing power. Like the .com bubble was an apps. If you actually got in from the ground running in the 90s, fuck me, man. That was like the biggest increase of value, not price. We're talking about value. That was such a huge... There was a reason everybody literally genuinely felt that they were getting rich. There was a reason that people felt like they were getting rich because they literally were. Like, it's incredible run. Like, if you think that people during the Great Recession, before the Great Recession, felt like they were getting rich, like, in this bull market. So this bull market here, let me just get it up for you. This was the run-up before the 2008 Great Recession. And people at that time, they would have felt like they were getting rich. They're like, oh yeah, it's like fucking Wolf of Wall Street throwing cash out the fucking windows. This move here, guys, was that. Like, it was such a fucking insignificant amount of value creation in that period. Like it was like like literally not even a tenth of the growth of what happened in the .com. They had this big arc up, huge extortionate. We wouldn't call it extortionate. You call it euphoric. Like it was absolutely mental. When you put things into inflation adjusted charts, it really makes you realize like who actually made money, like who actually made fucking money in this game. And the guys who were trading the Great Recession rally before the Great Recession, they made tippence compared to the dudes before. But the charts are very, very the charts wouldn't articulate that, you know. The charts would say that they're actually pretty similar rallies, but they're really fucking not. And then again, I've always said this about the stock market. If you want to jump out to a monthly chart, you would think, oh my god, you know, everyone's getting shit rich on paper. And actually, to be completely fair, they are actually right now, because the value is actually at the same level as the the .com bubble. But look at the time scale. You know, this has been happening for so many. This is literally, you had .com, which was from here to here, and you had the Great Recession period, probably in a shorter amount of time than this whole thing. So it's taken us since 2008 to where we are today to get to the same purchasing power as the .com bubble, because right now we're at the same value. So it's taking a long time to get there. But you know, I was thinking to myself the other night before I went to bed. I was like, because sometimes my brain just turns on before I fucking sleep for no reason. But I was thinking to myself, like, there are actually a few factors here which are going to lead to, I would say, significant price reductions in the stock market, gold, and Bitcoin. Like, there's going to be a very, very, very harsh bear market. And if you think about it, we're in the next 2 years, I think the stock market's going to implode. Gold's just done an absolute monumental run. And also gold's at its 2011 highs. So pretty much topping for gold. Pretty much topping for the stock market. We're not there yet. You can't definitively say there's a top because we haven't broken market structure on any of these markets. Gold is a good example. No definitive market break on this at all. Stock market in itself is not there. Like, let me quickly zoom in to see anything on the lower time frames. So let's zoom in on this on a weekly. Let's go on a daily to really get in there. So again, like right now, nothing. No break of structure on the stock market. We did have a really nice short trade. Like I always say to you guys, when you see the dumps, you draw on your Fibonacci's. So you go from here to here. Guess what, guys? Bang on 618816. Sorry, 618786 trade. Bang on the middle. So anyway, so stock market, nothing right now. Gold, nothing right now. I would even agree that, but Bitcoin, nothing right now. 33% chance for a bear market in Bitcoin. But we are very close to something really significant, guys. Like, it's going to be real bloody. And it does make me think, you know, maybe I should increase the amount of Bitcoin I'm looking to sell. I also own gold as well. And I also have stocks and shares. I probably won't touch my stocks and shares and my gold. I'll just use those as I would use a long-term investment portfolio. But like with Bitcoin specifically, it swings so much anyway. It does make me think maybe I should take the 25% of my Bitcoin I do sell and actually increase that. Because, yeah, we're going to get another one of these very soon. And, you know, we recovered so quickly from the prior bear cycle on the stock market and we just carried on going. And the guys, like, this chart doesn't lie. This is taking into account M2 money supply. So everyone go, oh, yeah, but this is only going up because they're printing more money. No. This is nothing to do with that. This is showing you how much the value is going up, not the price. So, like, this is quite worrying. The more I look at it, the more I'm like, we're at stock market highs pretty much, I would say. Gold's fucking going, it's bang on its 2000. We're close to the bear market, guys. We are close to a top, for sure. We are close to a top. I would just say that the stock market's going to take at least 2 years. Gold is not going to top immediately. It's probably going to do, you know, this is a year time period. So gold from here to here is around 1 year. So I think that gold's going to take about 1 year to top. The stock market's about 2. And Bitcoin, you know, everyone's calling it right now. But actually, you know, a year for Bitcoin, in another year for Bitcoin could end up with absolutely astronomical different prices where we are right now. So, like, Bitcoin's a bit of a wild card. I'd say 33% chance to go into a bear market. But I do think that when we get into the middle of 26 and towards the end of 27. You heard it here first. My prediction is, in that time period, that would be the highest probability that everything starts nuking and people legitimately are going back into cash. And that's going to be a big bear market. Doesn't mean it can't happen tomorrow. Doesn't mean it can't happen in 28. I'm just saying that the highest probability is between the halfway through 26 and halfway through 27. That's probably the gold zone right there of gold falling, stock market falling, Bitcoin falling, and cash is king again for a bit. And because the thing is, a lot of big traders and investors, they would have used gold to exit certain markets. They would have used gold to exit the stock market. They would have used gold to exit Bitcoin, but you can't really exit into gold right now because gold is at fucking monumental purchasing power level. Like this is the opposite of what you want to do. This is when you want to start selling gold. So cash will probably have a little bit of a moment, especially US dollars. It'll have a moment of bright lights. It'll have a moment where it shines like the fucking Maria. What's it called? Mother Teresa. What's her name again? Mother
Teresa, bro.
Mother Teresa. It's gonna shine like motherfucking Teresa. Anyway, I think that's a good fucking breakdown. I don't know. Anyone got any more questions about? That's a good one actually. So we got here. I don't think we're at the top. We're in a bear. Well, you can't. Okay, we're in a bear. We're in a bear. There is no liquidity in the US market. QE is starting in December. Yeah, I don't know about there's a lot of people talking about this. I think Raoul Paul's really popularized this whole point about the 4-year business cycle, and now it's been moved to the 5-year business cycle, all this kind of stuff. You know, the problem I've got with that is that liquidity can't be the only factor that drives the price of a market, because obviously you know that when it comes to the CPI and consumer goods and consumer items, you have to take into account that if the supply and demand of something changes, the price will change regardless of the liquidity and supply. Because we know that with goods and services in the economy. For instance, televisions. You know, it's not, the 4-year cycle means TVs have to go up. No, there's a huge amount of new demand and the supply, the demand's massive, so the supply increased, so the price went down. Because you can go and buy, like, you know that monitor that you got, Pete? That monitor 20 years ago would have been like $1,000. Now it was like fucking $100. So you have to take into account, I understand the business cycle is important, but you have to understand that there are other big, and maybe he talks about this as well. I don't know where you got this theory. I've heard this multiple times. It says the 4-year cycle is dead. No way 450 Bitcoin mined in a day has any dent on the Bitcoin market, on the exchanges. 100 billion a day, the ETF changing things. I don't think you can say the 4-year cycle is dead yet. You know, I think we're getting very close. I think if Bitcoin did rally for another year, you'd probably see that. Ultimately, though, I do think the 4-year cycle will break on Bitcoin because there's no historical price action that can give any evidence to say that any market of any price of any market has had a perfect 4-year cycle for a longer. And if you just look at a chart for longer and longer, like just keep going over decades, 20, 30, 40, 50 years, and gold is a great example of that because it's been traded with US dollars since the beginning of like essentially 1920s. So like there's no example of that. It has long bull markets and has bear cycles for 2 years and a long 10-year bull market. Then it fucking skyrockets and falls in different times. And look at any commodity as well. And commodities are a great example of, yes, the liquidity can be an important factor and the price can rise at a very similar rate over time. But if everyone tomorrow wants to buy sweet corn, the price changes. Okay, so you have to understand that there's a dynamic between the circulating supply of liquidity of US dollars and then what's the demand and what's the supply of that asset. Also, the same would go for this. If when Iran blew up Saudi Arabia's oil refineries, because we know that Saudi Arabia's income was predominantly started through oil, through Samarco. I can't remember the name. Let me get it up for you. The Saudi Arabian company, Aramco. So we know that, they sell oil. But if you blow up the main refinery, that means the supply goes down significantly. So that means that the marketplace then have to bid more dollars to find supply because if there's lots of supply and you want to buy it, you can bid down the price because you know there's loads of people selling it. So you're like, oh, cool. Everyone's fucking selling this thing. Who wants my fucking dollar? And you get bidded down. The other way it happens if the supply gets halved, then you're like, oh shit, who can I buy off? And then the people who are supplying, the prices rise because it gets bidded up faster. I need it today. I need it now. I need it one day. And it gets bidded up. So my point is that when Iran blew up that fucking oil refinery in Saudi Arabia, and my friend was in Bahrain at the time, and I was in Dubai, it had a subsequent effect on the price. All we know is that really the predominant factor of price changes is the circulating supply of the denominated currency that it's been priced in. But supply and demand's a big case, and that, you know, this whole thing that Raoul Paul's banging on the drum. He hasn't got a great track record either, legends, especially in crypto. I don't know Raoul Paul's track record in the traditional financial space, but I would say that he's a good talker, but I don't think he's really understood exactly the dynamics which really play in crypto. And he's not a price action trader. Like, you get all these fundamental guys who they think they know what's going to happen on the day to day. Like, even the guys trading price action every day struggle to really know with analyzing the market where it's going to go. Trading and analyzing is different. When you trade it, you just buy the fucking levels and wait and see what happens. I'm just saying that even price action traders trying to analyze lower time frames struggle. So if you're looking at fucking fundamentals to dictate what's going on, nah. Anyway, what have we got, Pete, in the money market media news? Let's start with the money market media.
There's a couple of questions still in the chat, bro.
What we got?
Last skin, I came in late. Can you explain why 94K is key support or support?
That's an easy answer. So $94,000, you can see here, is the bottom swing of the start. Well, it basically, when we rallied it, so go back a few steps. You can bring up other ways of analyzing this, but $94,000 was the very beginning move. And where you actually can find your levels quite nicely, guys, is if you draw your levels from a yearly time frame perspective. So if you go on a yearly time frame and you draw on the highs, the lows, the open and the closes of the yearly time frames, you're going to get a good representation of where good logical support and resistance are. Then you do it on a monthly. More lines start to pop up. Then you do it on a weekly. And Bitcoin, when you get to daily levels, it gets pretty fucking drastic because we know Bitcoin trades very quickly. But I'm saying that the 94K region is multiple levels. And you got higher time frame perspective levels, and also it's a swing weekly high before a long-term consolidation. So you can see the first move in is exactly this level. It actually goes back even further as well. I'm trying to work out exactly. I think it's basically based off. So if you look at these wicks, if you zoom in on this and go on a lower time frame, you can see that 94K was kind of the definitive factor of this whole. It's the whole fucking thing. Like, every single time, buys. It's actually wicking off it. Like, in most cases, you have a wick beneath it and then a candle close above it. So wick below, candle above it. Wick below, candle above it. Wick below, wick below, wick below. So it's all wicking into it. There's been a few instances of closures. But yeah, look, wick, it's a very, very good level. What you find a lot of the time, guys, when you look at the lower time frames, is the first move in to a consolidation. The first move in is usually very likely going to be like a really good level to look at for SR trading. And in this specific scenario, it couldn't be any better than that. Also, I have an indicator called AI charting tools, so I can show you this as well. You basically click one fucking button. Let me just quickly get it up for you, legends. So if you go on to the weekly time frame again. Sorry, I need to go on to the lower time frame, sorry. So you can see on this specific indicator, and it's a little bit wishy-washy. Let me go on to the 4 hour and quickly show you. But it's a good question because a lot of people would say that, oh yeah, I don't really know why it's support and resistance. You can see AI charting tools, which is one of my indicators, which I've developed with my old team. By the way, guys, I do need to talk about Botmaster because we are going to be launching Botmaster before Black Friday, and Botmaster is an insane product line I want to show you. But you can see here, guys, that we do have right in here, AI charting tools is showing you 2 levels of support, which co-align with the first swing beautifully. First move in, and then we went up to that level again, and we saw it as resistance. So the first time, it's a very pivotal point. Like you would call it, a lot of guys would call it a pivot point, but I would say that you have this level here, guys. The first time you went into it, you saw it as resistance, and then you found it as support afterwards, and actually it was multiple times. So I don't need to draw it on again, but I'll just do it on this chart. For instance, I'll just do a yellow line. You can see it's just beautiful price action, guys, in terms of what it did. You know, you come into this level, which has been respected as support multiple times. You've seen it as resistance once on the SR flip. You've broken above it, and you've held it again in exactly the same fashion as you did prior. Wicks, and then closing above it. So 94, that's the reason, guys, why. And look, the beauty of the market is that this is, you can, you know, everyone can say, but technical analysis doesn't work. But like, I didn't fucking choose these lines. This price, and this is on Binance, it's got the most liquidity of any exchange. This price happened, guys, on that exchange. It's respected it again, and guess what? It's doing exactly the same fucking thing. It's actually come in at 94. It's come into the pocket, bounce once, again. It's doing the same bloody thing on a level multiple months later. And like, I'm very, when I trade, guys, I'm very, like, say, relaxed about, you know, when it bounces when I'm in a position. But you have to, like, these levels have been drawn on for a long time. Even scraping out, guys, 2.7%. This is a wick. Let's just say you got the wick low, which you wouldn't, but I'm saying you could. 3.4%. Even now, it's another 0.7%. So all of these here, and I showed an image on my, like, even this trade, for a lot of people, would have been like, I don't rant and rave about it, but because we're so used to in crypto, like these crazy numbers, 100%, 200%, 500%. But I'm just saying, like any traditional standpoint, we were trying to make money. Like, this is a very, very good trade, and it's made 2.5%. That would be ultimately where I'd want it to go, you know. But we didn't get that, and I've been completely explicit and said, like, my stop loss is here, and my stop loss is not hit yet. We're getting very close to it, but it's not hit yet. But if you guys don't want to draw these freaking levels, and I've said this too many times, but if you don't want to draw levels and do it manually, you don't need to, because my AI charting tools kit, my little indicator here, it draws them all on for you. Okay, so you can do that for you. But we have a lot of stuff coming. I won't shield my company, but MDX Algo, we are launching Botmaster as well, guys. So you have the indicators, Hodl Master, which is my trading bot. We're going to have a lot of changes. I'm not going to give it exactly what it is, but we have Botmaster, which we're launching, which is, to give you a little understanding, we have a team of people who are constantly back testing our new indicator called Botmaster. Botmaster, you can connect to exchanges to use as a trading bot. But we have a team of people constantly looking at what the backtested results are of the indicator for multiple years and tweaking the settings constantly. And then on the website, you can see a panel which shows you all of the indicators and how profitable they are with those settings. And then you click a button on the page, it takes you to Trading View, where you have Botmaster, and then the settings are on your screen. So we have a team of people constantly finding the best backtester settings, so you don't have to. Massive value. And then you can then put the settings onto your indicator. You can trade it manually if you want, or connect it to exchanges. So essentially what we're doing is we're making it so you don't have to actually find what works anymore. You don't have to go on your indicator and look at the fucking backtesting panel and work out what indicator and what settings and what time frame works. We've just got a team of people constantly finding the best time frame, the best settings, and what works. And then you just click one fucking button, and then you can trade that strategy. Updated daily and weekly. It's probably going to be updated every 3 days. I want to go for every 3 days, you get a fresh update. But the good thing is that in the Botmaster panel, you'll have a connection to the traders as well who are doing the back testing. So if there's an announcement, they could just be like, guys, quick announcement, we're changing the settings of this, and then you can automatically do it. It's an absolute game changer, and it takes me back to the thing I said before about how, like, what is valuable in this game. If it's difficult to do and it's very scarce, people will want to buy it. And this is very difficult to do. It's very scarce because you need people who actually know what they're doing with the indicators. It's hard to find people who can even build these type, can actually do the backtesting results. And also, guys, you have that. So it's scarce, it's difficult to do, and also you have one-on-one connection with the people all of the time. So Botmaster is going to be a fucking game changer. And what I'm going to do is I'm just going to basically use it on screen, on stream, and show you guys, because I'm going to move all of my bot systems away from. I'm going to use all my manual systems and my trading bot systems, which I use, predominantly Hodl Bot. I'm going to move it over to the Botmaster indicator and just use that because there's no point not to anymore. Anyway, so that's cool, man. Like, what else we got, Pete?
Maybe we've got some more people in the chat as well asking you some. I don't know if we're at the top. We've been a bear. This guy's saying actually it's Michael Saylor saying that golden S&P is forming a giant cup and handle.
Say that which ticker? S&P?
Sorry, just gold and the S&P are forming a giant cup and handle at the moment. Bitcoin going down to 70Ks. Will we bounce here or we go down? That for sure. There was actually one question in there that I did think you might want to answer, actually. Yeah, so if retail are so long, why does the market just not drop it on them? Why is it a gradual downwards move?
So if everyone's so long, why is it just a gradual...
Retail specifically.
I'm going to make a point right now. It wasn't that fucking gradual when it started. It wasn't that gradual, legend. So this is a really, really good example. This went down 18% in one go. It dropped 18%. The cross happened of the long to short ratio on Binance here. So you had, let's get it exactly on. Okay. So you had the price fell. Oh, fucking hell. The price fell after the long to short ratio flipped 15%. This is when more people were long. And then because guess what? The price was going up when everybody was short. So you see everyone's shorting the market. Short. The main thing with this indicator, guys, is that where you get the crosses. This is like the main crux of the indicator. But if you want to use it in a little bit more of a nuanced way, there is some areas where if the longs are falling, the shorts are rising, you do see cyclical bull or bear cycles. But you can see here, everyone was long, and then we got now more shorts in the market. So there's predominantly more shorts. Guess what? The price, everyone's short, so they should be going down, right? But no, the price went up. The price was rising. Here's a good example, actually. So you have more shorts in the market, but then the price started falling a little bit. But guess what? The shorts started falling and the longs started rising. So if you do see longs rising and shorts falling, it does mean the price can go against the majority, depending on the direction. It's very similar to the 200-day moving average. When you got the cross here, where longs took over, the price fell. And ever since longs have taken over, the price has been falling. Again, another good example here, guys. When the longs were falling and the shorts were rising, there was a section where the price went up a little bit. But we never got across. We never crossed over to shorts taking over. And I would, okay, let's just go back in history. This didn't happen, so obviously it's hindsight. But if the longs kept falling and the shorts kept rising and they crossed, what you probably would have seen is the price begin to go even higher. But obviously that's not what the market did, and you can't. I'm just saying that we almost got across, and then longs started crazy going up. And look, as soon as longs started rising, the price literally started falling exactly on that moment. As soon as the longs began to rise again, the price began to fall. The thing is with these moves, what I've found, when the price... This is quite difficult to trade, though. It's quite difficult to use this indicator to come up with a quantifiable entry and exit on the basis of the indicator while it's happening. The crosses are a little bit more significant because you have a moment within the indicator that you could put into a strategy and say, when this happens, do this certain thing. Or when they cross in this environment, do this certain output. So because it crosses, you can put an input and an output into a strategy. The issue is with this, it's kind of a bit difficult to trade on the basis of it. It can give you a little bit of an idea. Okay, well, you know, we've now peaked in longs, the price is falling. Now longs are falling, right? And shorts are rising. It's kind of working inversely. but it's more difficult to trade this in the specific point of it happening. It's easier to look for the crosses. And right now, guys, like, you know, everything's long. The price is still falling. And even top traders are getting wrecked. You know, top traders are at fucking 74%. Top traders are even getting nuked. And back to your question, if I want to answer it correctly, why doesn't the market just take them all out in one go? The market has already taken out a significant amount of the positions in one go. Like, we see long squeezes and short squeezes. Like, these happen all the time. But the reason that it doesn't, like, instantly take all the longs and instantly take all the shorts is because you have to remember that the market is built up of millions of participants. It might even, like, it's millions of people who are, it's institutions, it's public companies, it's now private companies, it's fucking retail traders, you got investment firms, hedge funds, family offices, you got the random dickhead in the street buying 10 quid on their phone. The market is so mature now, considering it used to do that, by the way. if you go back to the BitMEX days where most of the volume was happening on BitMEX, it did literally used to just take out the positions like a hedgehog. It was the Bart Simpson pattern. I can show you it right now. It's difficult to go back that far on a lower time frame, but I can show you the hedgehogs. These were the fucking most funny days ever. Like, I'll go back to you and show you when the market was less mature and it genuinely used to do that. So, like, you can see here that this is a very, very manipulated, disgusting area of price action. And it was because the Muir-Buatang indicator, the Muir-Buatang, which was the long to short rate, it was the funding rates on BitMEX. BitMEX didn't used to provide the long to short data because they used to use it themselves to do what they're doing here. But we used to be able to get an idea of what they were doing on the exchange, the retail traders, via something called the Muir-Buatang funding rate indicator. And you would know where the longs and shorts were by the funding rate, because if the funding was paying shorts, everyone's long it the other way around. So funding rate is essentially balancing the books, but if everyone's short, usually shorts pay the other side, which means everybody's short. So you can look at the indicator and get that. But you can see here that this was when the liquidity was very low. It was a very small amount of exchange you could trade on. And what you're saying actually did used to happen. Like, it would just be like, take everybody out, take everybody out, take everybody out. And then look at this. This is literally like down, up. It's just literally hedgehogging. Like, if you go to a lower time frame, you can't do it on the 5 minute now, but this is like not okay price action, legends. This is just taking people out on either side. Like look at that. And it stops at perfect levels when all the positions are taken. It's just soaking up all the positions up and down. And then we broke out. I remember this whole this bull market. This is a great, oh shit. This was a great move here. Fucking hell, it's going so slow. This here was exactly the same price action as when everyone started shorting the recent bull market, when they were like, no, it can't go up any further. No, it can't go up any further. And the funny thing was, in this specific scenario, and this is a long time ago, it was all the same shit. It was like Richard Hart and all these fucking morons coming out and saying, the RSI is over fucking 10, so it has to go down. And I remember everyone was just completely shocked about this move because it broke out. And this was a way easier market to spot that it was going to continue. And at the time, I knew a load of guys who got wrecked by this as well. What we did in the prior cycle only just got above $30,000. If you remember correctly, it went above 30K and everyone was saying short when we broke out. This was the big, and actually you could even draw it twice. There was two levels. This area here was massive resistance. You can see the price just couldn't get above it. And we have an ascending formation. So we have the lows were getting higher and the resistance was getting smashed, 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 and then broke. So it was just getting hit up. When this broke out, people were saying, it's over, we're coming back, it's going to continue the bear market. Like, this is fucking retarded. There's no short here. The only long you can take was if you come and retest the high of it. That would have been a great trade, but the market was extremely, let's call it frothy. It was ready to go. And I remember this was a very simple trade. It broke out and we just continued the rally. Very similar to what we did when we broke $30,000. But everyone made the same mistake because I was trading for, what was this, 2019? Yeah, I started trading in 2015. So I'd already been trading for like 5 fucking years. Less actually. 4. So this had yeah, I'm just trying. I don't know what I'm basically saying that this is a much easier one to spot because it broke out of long-term resistance, and you're never looking to short back in. You always look to go with the trend, and you broke long-term resistance. And if you look at it here, it's exactly the same fucking thing that happened to all these guys many years later. This is now going on another 5 years. You see this market move here. It's very similar, guys. So you zoom out. You've got 2 areas of resistance. Obviously, you had in here, which was the 30k level. And then you had that. I actually had 2 lines drawn. You can see it did exactly the same fucking thing, guys. It wasn't as clear as that prior one. That prior one was a much cleaner break. But this was a break. And everyone was saying, no, it's going to come back. And we're going to continue the bear market. No, it's going to come back. And remember that? Everyone was shorting into it. And I was on my channel saying, you're long until proven otherwise. You do not... I actually said that when it happened, there's no trade here. You wait... and then you start looking at buying support and longs, and that's what we got. Fucking absolute moonshit, because you broke out of it. So, like, it's, yeah, I don't know, I went a bit of a rant there, but fucking, let me go on to the lower time frames again. Let's go on to that hourly time frame, baby. So my bot as well had a really nice trade. So my trading bot got out here. That was where it sold. So the MDX Hodl Bot, when it rebuys, let's just say it rebought now, it'd be up 9%, which is a free fucking resource. So you can go on my website, click on Hodl Master. I've changed the name, by the way, guys. It's called the Hodl Bot, but it's called Hodl Master. You can come here and you can get my trading bot for free. Set it up with one of the exchanges. It's a free fucking bot, and it's done 9,000% gross profit over the last... Now it's getting on a bit. We actually need to update for the next years, but overall it's taking overall, but we can't even see back. Like, it's fucking 25, going on to 26. It's been running now for like 7 years. I've been using it the whole time. I'll put the link somewhere. Whack this old link somewhere, would you, Petey, for me, bro? Whack the link in there for me, Petey. Actually, no, I'll do it. I got it right here. What we got anyway, brother? What's the next big thing?
I'm trying to fix my laptop in the background here. I don't know what's going on.
Oh, what? You're overheating.
We do have the Freem in chat as well. I don't know if you've read this one, but if we just closed weekly under the critical support EMA, fear is at 10. There's no knife under to lower levels in a follow-up with 5 billion of liquidity just to even retest 100k. Why would anyone be bearish here?
I wasn't listening, but I'm going to read it on the screen. I was just typing. So, if we get just a weekly under critical support EMA, fear at 10. Yeah, what's the fear and greed index? Let me quickly check. Fear and greed is, yeah, down at 14 on my chart. The stock market's extremely fearful as well. Massive fear here as well. Yeah, like, there's no knife under to lower levels in follow-up with 5B of liquidity just to enter a retest 100k. Why would anyone be bearish here? I literally, like, I don't use terminology bullish and bearish. I simply do not think it makes sense. You're never bullish and you're never bearish. You're just playing the levels as they come. Look, I've said from the beginning of this video, I do think it's a 33% chance that we are going to start a bear market on the premise of the 3 parameters that I use. It's the 200-day, the structure, and the volume. The 200-day moving average right now is good for the bears. We're below it significantly, and it's about to start aiming down. It's not a good look, legends. There's not. If you look at bear markets, aiming down resistance. Okay, big fucking nuke. Aiming down resistance. Aiming down, that's actually up the first time, but aiming down resistance actually resulted in a massive bear market. If you go on Bitstamp, you can see even further down. So there's one thing, it's a 33% chance for a bear market to start. But like I just said, all the levels are on the screen. This, you can't really see this because it's the everything level. What I'm going to do actually to clear this up a little bit, because I drew on this from here. I showed you earlier, guys, the 94k, the reason it's here. Make it yellow so you guys can see it. You can even see as well, like, we've got multiple closes here. We've got May, we've got Q1. It's just crazy, the amount. So let me draw on all these levels for you guys. I always extend them out because you never know how long they're going to be respected. So like I said on this chart, Legends, you take a combination of AI charting tools, which is saying 90 fucking 4. Here, 94, 88, and 74. They're the 2 buys. But just don't use the terminology bullish and bearish. I know that sometimes it slips in because we've all been trained by fucking traditional, whatever process you've gone through to become a trader. Like, it's always that thing. You've got, like, New York, a big bull. You've got bears. Everyone's using this kind of terminology, bullish and bearish. But it's not a good thing to do for your mental clarity and also your psychology. Just don't do it. You're not bullish, you're not bearish. It's fucking bollocks. You're just looking at the levels and what are the relevant SR. And that's it. That's all you fucking do. Get rid of it. Because also, bullish and bearish makes no sense. Because you could be bullish on a 1 minute, you could bearish on a fucking 1 week. You know, it doesn't make any sense. It's just like, what are the levels on the time frame? 94 is a buy, 88 is a buy, 74 is a buy. Those are the 3 fucking bounce trades you've got. I will hedge the 200-day moving average with a hedge short and 100K. When we go to $100,000, guys, I'm shorting that level. If the 200-day is in confluence with it, I'm shorting that level. If we go to the 200-day and it's moving down, I'm shorting that fucking level. But it's only 33% chance for us to be in a bear market. The volume's not in confluence and we're still above 74. But because it's a 33% chance to go into a bear market, take action on the basis of that. And that's what I'm going to do. I'm looking to short 100 if we get it. And if we don't get it, fine. We'll just get more of a drawdown. I've still made fuckloads of gains. I'm not here to try and squeeze out 100% of every fucking move. We're not here to do that. We're here just to make the money where we can. And if the price does go all the way to 74 in one go, yeah, you're going to lose, say, 30, 40% off the top. You're going to skim 40% of your bottom line off the top. But, bruv, we've been long from 15. So we're chilling. It's not like it's not a massive issue. This is another big mistake people make, is they look at how they could have made this amount of money, but they didn't. And they go, oh, I'm an idiot, and then they overtrade, and they end up losing everything. But if you really think about it in a psychological way, you were never going to sell. Like, I had a friend who was like, oh, but it went to $5 on Sui. I was like, but you were never going to sell it when it went to $5. Because... Sui! You were never going to sell it at $5 because it's going up. But my point is this, it's going up, so you're never going to sell it. Like, there's a blue sky breakout. You're an idiot if you did. You as a price action swing trader, you want to just let the market go up as much as possible, but then lose 30-40% when it nukes, right? It's going to go down 30-40% when it nukes, if it does. But I'm saying you're very likely to get a retest, and then that's when you go, now I need to execute and take the profit off the table. But let it go up first, because if you try and time, $2 at the top, $3 at the top, $4 at the top, $5 at the top, whatever the fucking asset is, it's all fucking gambling. It's in a blue sky breakout. Could go to fucking $20. Why not? Especially with these fucking altcoins. There's no liquidity. So you don't know how far it's gonna go. So don't try and, it's just stupid. I'm just trying to articulate to you how stupid it is for trying to time a top or a bottom. If you really go down the rabbit hole in your mind and think about what you're trying to achieve, how you're trying to achieve it, and does it make sense? Even if you did call the top and you sold the day of the top, it still was because of luck. And if you base your future in trading on luck, you're going home with nothing. So I actually use this as a tool to validate in my mind the proficiency of traders. Because if I see traders coming out and saying this is the top, this is the bottom, on the basis of no price action, it's just happened and it's gone down a little bit, then I know that they're an unsophisticated gambler of a trader. Because you don't get sophisticated traders calling tops as soon as the price goes to a level. Because they're looking at the charts. They're price action guys. So they need to see something on the chart to actually give any level of probability that it is the top. Because if the price goes up to $125,000 and then drops to, in this case, $100,000, or let's just say this, the price, because people have been calling this a lot longer than, people were calling for a bear market when we were here. It did this and it did that, Well, everyone was calling for a bear market here. Oh, bear market. Oh, it's a bear market. It went down 20%. It went down 15%. People were calling for this as being a bear market. It went down 15%. So people were like, it's a bear market. The top is in. That is the first sign that these guys are fucking morons. They're not actually doing anything on a level of using any. They have no parameters. They're not using any fucking way. They're not using a system or parameters or a way to look at the market. They're just saying because the price went down after going up for a long time, now it's the top and now it's a bear market. So you instantly know that these people have no idea what they're talking about because you need to wait. But everyone's like, no, but if you wait, you lose the gains of the high. So you're allowed to lose 20% on the top. Why are you so fucking greedy that you want to make all of it? Be happy about making the fucking long from 15K to where you are now. Be happy that you even made anything. Like, that's the problem. Everyone's like, but no, it's going down, so I must sell at the very top to get all of the gains, you greedy motherfuckers. That's just greed. Be happy. Even if this falls to 74K and I sold everything at 74K, I'll still be happy. I'm up 65%. Like, if it rallies back up and then I manage to get out on the retest of the high, then I'm even happier. Because I'm like, wow, I managed to actually have the probability of it coming back. And anyway, that's what you should do anyway. So, especially on lower time frames. I'm saying short every pump at the moment, okay? Every pump short, especially $100,000. And when the 200 days starts coming around, short. So if it does this now, it's a fucking short. Coming back down, then hopefully we get a higher low for the balls, and then we go up. But anyway, I'm trying to just do this point over and over again for you guys. Like, it's 33% chance we're going to go into a bear market because of the 200-day moving average. We're still above 74, so we're all looking good. Anyway, we'll continue on Bitcoin for a bit longer. Never underestimate the predictability of stupidity. Well, the one thing that is consistent is that you're always going to get morons. The one thing you really can rely on, legends, is that it's easier to be an idiot than to be not an idiot. Because being an idiot means you don't think. But to think expends energy. So by de facto, being stupid is going to be higher in probability. Or let's just say making uninformed decisions and making stupid decisions, there's a higher probability of that happening because in that process you don't think. Because to think, you have to expend energy. And human beings are always trying to expend the smallest amount of energy for the highest amount of output. Because it takes energy and time and effort to expend energy. So that's why the majority is always going to be retarded. Because the majority of people aren't going to spend the time and effort and put in the time to actually make it so it works. But that goes for everything in life. Like, look at Pete. Great example. Zero effort, trying to get the biggest outcome. And, he's got no stop loss.
You missed my question in the chat.
Trump in the... What? That's not the right one. Are you a top or bottom? Pete, come on, man. You're just out there, just throwing in the jokes. I'll tell you what, brother. I'll be really honest with you, Pete. I don't do either.
I don't know where you're going with this one.
Yeah, no, listen, I don't do either. I'm the I'm the guy. I'm doing this. I'm doing the side on stuff.
All right, look at what I'm bringing up. This is it leads into what you've just been talking about. So there was someone who's been holding Cardano for a long time. Well, he's holding this amount for about 4 or 5 years.
Yep.
And he's basically rode it all the way up and then rode it down, then basically decided to sell it. So imagine holding on to some crazy Cardano dream after not selling 45 million, watching your money slowly disappear for years. You're finally ready to give up and change your life with 7 million. That's how much it's worth. Get yourself ready to push the button, and it's all gone. My stomach turns just from thinking about it. This guy's basically fat fingered it. He's tried to sell it in the pool with Cardano stable pegged to the USD. So,
mate, what's he done?
Low liquidity. He's basically lost like six mil. out of it, and he's only got.
Well, he put all of it into a fucking USA
6.9 mil,
stablecoin pump and dump. But he fat fingered
it. He's tried to cash it out, and there's low liquidity, and it's just absolutely wrecked him.
The issue I have with this though is that you're seeing a lot of these popping up, and I don't think it's impossible that these people are just like trying to get like $100 into an address. Do you know what I mean? Like I'm seeing so many of these like tweets now where it's like these big sob stories about people losing all their money. And I would say like probably at least half of them are just like fake, and they're just getting people to send money to an address. They're trying to pull on people's heartstrings.
Well, no, this is just from Zach XBT. He's seen this address. This person's just done this.
Okay, so they have verifiable numbers and shit. Okay, that's good.
Yeah, absolutely wreck themselves.
Yeah, crypto is one of those places where like you literally do have kids losing like more money than most boomers have even made their whole lives in like a day. It's absolutely Wild West shit. I fucking love it. But have you seen that guy who's like, thanks for the 20 bandos?
No.
Have you not seen it?
That?
Bro, oh mate, I gotta get it up, but I can't really get it up because it's on my computer and I don't want to fluff around loads of files and give away loads of fucking incriminating evidence of things I've done. No, type in do this, bro. Go on to we'll look at this as well. Oh no, fuck this. On-chain transactions, shut up. So like do YouTube and type in child pump and dump 20 bandos. I'm sure it will come up with it. And it's absolutely it's the funniest video in crypto. Like hands fucking down.
Oh yeah, I know this kid.
Got the 20 bando.
Good.
Yeah, put it full screen. Look at him.
Oh, what? Literally just sliced the micro. He doesn't even know what's going on.
He's like,
how
what?
can you hear it?
Wait, what?
Oh, thanks.
Wait, what?
He said, wait,
Wait,
what?
I'm so confused.
What? Oh, yeah, it's nuked. Why is it nuked?
No way.
Oh,
Holy fuck! Holy fuck!
You full clip.
Holy fuck! Thanks for the 20 bandos.
yeah, he did.
Yo, 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 yo.
This is who you're trading
yo,
against, Legends.
Yo, 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 what the fuck?
So essentially,
What the fuck?
so
No.
thanks for the 20
bro.
bandos. So essentially, he just pulled off on live stream one of the quickest pump and dumps, which the SEC take down massive multinational organizations for doing. They wiped out all of the dudes like from the Wolf of Wall Street era. They're all doing pump and dumps. Everyone thought that he was doing Ponzi schemes. He wasn't doing Ponzi schemes. He was doing pump and dumps. Like, and like, this is the whole fucking thing. Like, he literally did what the SEC, their mandate is there to stop people from. They are the Securities Commission, essentially. They're there to stop you from selling stocks, shares, and tokens or anything which represent the quality or increase of value of the company that you have. Because if it's not a security and you're doing that, you'll get fucking sued by the SEC because you're trying to sell something on the premise of it going up in price. That means you have to advertise for it. He literally just did that on live stream, but the SEC ain't going to go for him because he's a kid. But technically speaking, what he did was full-blown fucking illegal in terms of the regulated financial space, traditional financial space. But in crypto, that shit goes, no, not this fucking guy.
Yeah, it's fun. Well, it's not funny, but it's mad the difference in BitBoy when he was like on his full. Now it looks like he's heavily medicated and stuff since he's come from.
I can't hear it, by the way. There's no sound on it. But
You got no volume.
no, he's mate, I don't want to bother because I said it from the beginning. Like they even invited me to go on their show a few times, and I was just like, no, I don't want to really like even be a part of this thing. Like he's just a crackhead, bruv. Like he used to talk about it. Like it's crazy crypto. But he had a good community, I suppose.
It looks like he's on a lot of meds, isn't it, these days? Like his streams and stuff is so low energy.
Like the thing is, what he did for crypto was kind of good because he brought it to a big audience, and he was very like he was used to be like quite a family orientated channel, I used to think. But the problem is, it's like it is a recipe for disaster, because at the end of the day, if you are someone who has a big following and you're giving out types of, you know, calls and advice about financial instruments, like, it's a very difficult game, even for people who are professional traders for decades. They get it wrong, and like there's a lot of money at stake. So like it's a recipe for disaster. If you really have no idea what you're talking about and you have a massive following, you're going to end up like this, because you're just going to end up losing all your money, for starters. You end up fucking losing a lot of other people's money. That's going to put you under a lot of risk. Like, there's a lot of people who might actually get fucking angry about that and want to do something about it in terms of regulatory risk or even fucking like your own life. It's a recipe for fucking disaster. But
Thanks for 20 bandos.
Thanks for the 20 bandos. Mate, that kid is a fucking legend. That's who you're trading against, legends. Thanks for the 20 bandos. Like, I say it for a joke. If you make money in crypto on meme coins, you shouldn't celebrate, because you took money off a child. That's just weird. You're a fucking pedo. That means you're a pedophile if you do that. Elon Musk.
I was someone in the chat saying we're breaking 93k. This short is looking spassy.
Yeah, I'm gonna get wrecked on it. I'm probably already stopped out. Let's have a look. That may have been it. Yeah, I think I'm stopped now. Yeah, the blue area's gone. I've been stopped on the long. So this position here, which I've been talking about for a while, it went into some nice profit at the beginning, but it's fine. The stop loss is in, and it's now likely gonna fall. The price is now likely gonna fall down to 88. If, you know, it could wick, like we've seen the wicks from the beginning of time happening on this area. Wick, all the way through here. Look at all these. That's the level we're losing right now, legends. We're losing this level. Let me get the exact price. We're losing this level here. Like, the amount of times we bounced off it, if we lose it, it's pretty significant. Like, we're going to probably go quite low. 88. And if we hit 33% correction, that'd be pretty in line with what we've done on the last two moves. Let's watch it out. But let's watch it, and also just look at some hilarious thanks for the fucking 20 bandos.
Thanks for the 20 bandos, brother. Yeah, what's this Elon Musk talking about? How we're going to have to... I think we're a long way off of this stuff. But I understand what he's saying, how we will have access to some of the best healthcare and robot surgeons and all that sort of stuff.
Yeah, man. This is fucking obvious.
I wonder how quick this is going to happen, though. Like,
Elon does have he has a knack for like calling shit out, and you're like, what? Only that amount of time? Someone needs to go. They need to use Grok to verify it, because he said that in 6 years we're not even gonna have applications on our phones and shit.
Do you reckon in our lifetime, me or you will have robot surgeon like working on us, just fixing?
Bro. Honestly, mate, mate, listen to me, bro. Like, they offered in the American hospital in Dubai for my appendix to be done by a robot.
What?
Yeah,
what
bro.
Sort of robot, though?
Yeah,
but it's teleoperated. It's not like
no, it's a robot, bro. It's a fucking robot. They put in they scan you up, and a machine does it.
I don't know.
Yeah, what do you mean you don't know? What do you mean? I'm telling you. The fucking mean you don't know? I'm telling you, motherfucker.
It's not real, bro.
No, seriously, it cost $20,000 to do it, so I didn't do it. But I did laparoscopic surgery. So there's 3 types of... it's very, very rare, by the way. You wouldn't probably find this in any hospital. It'd obviously be a private hospital in the United Kingdom, but you wouldn't find it on the NHS. I'm just saying that there was their high-end, very expensive thing, and it literally said on it, robotic laparoscopic surgery, and it said that it's 1,000 times more precise than a human being.
Yeah, but it's still operated. It's operated by a human.
No. It's not operated by a human, bro. They scan your body in a machine so they can see all of your internals, and then the machine goes in and does the surgery. But it knows where it is. But there's no human input. There's no human being. It's a robot.
That's crazy.
Let me ChatGPT it. Let me just watch this level. You ChatGPT it.
No, we were in the hospital offering you a robot surgeon.
And it was $20,000. I did the laparoscopic surgery, which, you know, I actually got advice from, I think it was a family member. I can't remember. There was one which was just like literally cutting a hole, which I don't think they even really do it anymore. But I think that was very cheap, about $1,000. The one I did was $7,000, by the way, just so you know. Like if you lose your appendix, if you have an appendicitis in Dubai, I think mine was quite an expensive one because I went to like one of the best hospitals, but I think you're ranging between like probably $3,000 to $7,000 for an appendix out if you pay your own money for it. But then the one they were like, do you want it? Was like, I think it was like $17,000 to $20,000 for a robotic laparoscopic surgery. But I think I think actually you're probably right. There's definitely a robot which does most of it, but there will be some sort of human input. It won't be like a robot walking in and hello.
Yeah, I've seen a lot of doctors and surgeons. They have like the little control pad with the little sticks.
Yeah, I maybe, but I'm pretty sure that it's not that. I think they were going to put me into a pod and they were going to scan my whole body and they was going to go like. They probably have to hold you down and shit.
Do you remember the origami one where there's a surgeon flexing his skills by doing origami with the robot thing?
Have you seen the one where they just turn you into a piece of sashimi?
No.
You go in, and then the robot comes along and just cuts you up into little bits of cubes, and you just get eaten up. The issue, I don't know about the robotic shit. We're definitely going to get it though, because you can already see it happening. Like, what fascinates me the most, and by the way, the stock market is extreme fear. But what fascinates me the most is if you go back to 10 years ago and you look at what phones we were using. It's just like, what? Like, it feels way long ago, like we were using those phones, but it's only 10 years. Like, you got to remember, you go back 10 years, I was 23, I was in Bristol with you at 23. I'm pretty sure I had an iPhone 6, but you see the phone, you're like, what? That's fucking shit. But it's like, I know you're still using those ones, but
I've still got the flip phone from Matrix.
You've got the Nokia N96.
Yeah, they were. I
remember.
I remember my first ever call from my mobile.
Mate, I remember when I went on a night out at university, and I had an old Nokia which I used for like going out for some reason because I just didn't want to like break my phone because I always get pissed and break my phone. And I remember I was at uni halls, and I just woke up like I had a hangover, and I woke up and I went to the toilet. And I saw my phone in the toilet because I obviously gone for a piss and dropped the phone in the toilet. And I'm not joking. It'd been sitting in there for probably 10 hours after a 10-hour sleep. I just had to put my hand and get the phone out, and it was just working fine, just sitting in the toilet like with the water.
Yeah, they're beasts. Well, and it's come full circle because you can still do that again now because they're all waterproof. But there was that brief time period where phones couldn't be treated like that.
It like wasn't waterproof, but it was.
Yeah, it's come full circle. So there's a limited number of doctors and surgeons. They don't grow on trees, but now they all get built in factories. So doctors going to be out of the job a little bit.
I know, mate. Well, it's yeah, I know. But everyone's so scared of it. But it's going to be good. It's just everyone's missing the point. Like I said on the prior stream, I was like, usually things when you look at them flat, they look a certain way, and there's usually certain solutions you think would work. But as soon as you scratch under the surface of that problem, it's usually like a completely different thing, which actually is a good solution. So everyone's like looking at it like, oh my god, they're gonna take our jobs. Oh my god, no one's gonna have anything to do. No one's gonna know what their vision or their purpose in life is. The thing about that is like, well, we used to be like we spend 90% of our time just farming all the time. Like, we literally, like, human beings during the Egyptian Empire just farmed. Like, that was your whole life, just farming and then eating the food from the farm and maybe having a little bit of time with your family. But now we obviously look back at that and go, well, that was just, like, primitive bollocks. Like, no. It's going to be the same thing. Like, we'll just look back at what we're doing now, having to go on a construction site, having to do this, having to go and work, having to write things down. Like, all that shit's just going to look back at it and be like, well, yeah, why the fuck would you do that? We'll be doing something else. We'll be plugging into the fucking metaverse and running around playing Baldur's Ballsack, but it'll be like we'll be in the game. Which is going to get weird, but it's going to be fun. Yeah, that weekly candle was not great. That weekly fucking...
What are you saying?
I'm saying the weekly candles
Oh,
engulfing. So 94 if you lose it decisively, got 88 and then 74, like I said at the beginning of the stream. Those are next trades. 88. It's actually not 100% 88. It's actually between 88 and around 85-ish. Because you got to zoom into this, and then you go over here. And you go to the area of consolidation here. So it could be as low as... Let me find it for you, sires. Okay. Yeah, we could be as low as 84. Well, and then these wicks are the high price. So it's in here, yeah, you're going to get between 84 and 88. So this kind of pocket here, it's very likely it's going to come into it and then bounce off it. And then if we lose that, we're going to 74. And then we really are getting close to a few of my parameters saying that this is bear market territory on this move down, but we're not there yet. We are not there yet, Jan Squire. Let me have a look at funding, actually. I haven't looked at funding in a while. Yeah, we had a little bit over. Interesting. Funding. What else we got in the news, brother?
Hey, Egyptians built the pyramids, bro. They're not just farmers.
Yeah, slaves as well. Yeah.
Well, the aliens built the pyramids, so...
Mate, remember that thing which you got really pissed off when it came out on like some news thing and it was like, we couldn't build the pyramids today. And you were like, yeah, we could.
Yeah, we could build the pyramids today.
I think if you took into... Okay, if you had unlimited resources and money, probably.
We built one, didn't we? The Bass Pro fishing shop. That's a pyramid.
Do my neck. It's getting a bit creaky. No, but like I'm actually not even joking. It in terms of like, if you really put the logistics down to build it out of the materials they did, and we're talking no slaves involved. We're talking invested. You need money and investment, and you need to have all of the right like the drilling equipment and the fucking construction companies. You'd probably find it is near to impossible to do it without the will of just doing it for an absolutely massive financial loss on every single level. It would cost like, mate, it would cost, I don't even know. It would probably be running up. Let's just think about something which was expensive. The Burj Khalifa cost, in inflation adjusted terms, like $4 billion. It's gonna be so much money to build them. Like the Burj Khalifa, like it's essentially like a tiny little fucking needle going out of the ground. I know it's very tall, but it's not wide or anything. It's like it basically looks like a needle going out of the ground. $4 billion.
Have they given up on that? The Lion City. Do you remember the city they were
no,
building?
it's funny. They built 1 mile.
Yeah, what's it supposed to be? Like
It was supposed to be like 200 kilometers across the whole country, but the Saudi Arabians are not doing any of those things because they're going to do them. They're doing those types of things to get massive publicity through Western media. I actually think the prince, I think it's Mohammed. I can't remember his exact name. It's one of Mohammed bin. I don't know his exact name, but he took over from his father around 15, maybe 10 years ago. I can't remember exactly, but his son, who's the prince now, is actually a legend. He's against Sharia law. He's like allowed women to have loads more rights all across the country. He's really like trying to get like the tourism and the media machine working to change. He's really trying to change the way they are perceived because of a lot of the history of, Islam. But also everyone gets this wrong. They think that Saudi Arabia and like Iran and all the Middle Eastern countries are all exactly the same. Saudi Arabia literally hate Iran with their guts. They're like arch enemies. And then you've got like the UAE, which has Mohammed bin Rasin, who's the prime minister of the UAE and the king of Dubai. And they have a completely different view on things. And then you have like Bahrain, which is completely different. Then Qatar and then Kuwait are building this whole... If you type in I think it's called the Ocean City in Kuwait. Mate, it's mental. They're building like another fucking Palm Jumeirah. They built another Palm Jumeirah in Kuwait. And then Saudi, all the Middle Eastern countries have such like differences in the way they think about things, and that's what most Westerners don't understand. They think that the Middle East is just they're all the same, but mate, there's so much difference in what people think here. The Saudis are actually gonna fucking do it, mate. Mr. Beast got funded.
Oh shit! Yeah, he opened up that
Let me see your screen. Have you got it up?
Beastland. No, I'm looking at some other bullshit. Let's get that up though. Beastland.
Yeah, Beastland. Mr. Beast is doing it in Saudi Arabia. Yeah, let's not get any British politics up. We've been through that. We just need Farage in. Like, the end of the story, guys, about British politics is we just need Nigel Farage to win. Like, he's going to win anyway. I called this out fucking 6 months ago. He's going to win. Yeah, this is his website, which for some reason, the LP is really shit.
Yeah, what's going on? What's going on with that picture?
It's like a fuzzy photo.
It's
like a fuzzy photo. I was like,
surely they've got some cash for the website, for the Riyadh season website as well.
I don't know.
Oh, there you go. There's a bit of like, that's a bit more.
Yeah, but why is that not the main fucking one?
I don't know. Why is he in a suit as well?
Yeah, it's not you, man. Like, he's been roped into some weird, like, marketing corporate shit. There's not. I don't know if there's any.
You can pay £7, but you don't get to go on any rides to go in. It's quite good, I thought. Loads of people are like, oh, you got to pay. But
yeah, why would you go to a theme park for no rides?
Well, you go with your family, don't you? And there's often like maybe your nan or something. She don't want to go upside down.
I don't think your nan's going to Saudi Arabia.
Getting strapped.
I don't think your nan's bowling to Saudi Arabia.
Yeah, there's a lot of babushkas in Saudi, isn't there? Like just all over the game.
Mate, they're all just locked away, cooking and cleaning.
Every king has tried to build some kind of city, and every city failed, literally.
Every king. Well, the funny thing is, mate, I don't know what this guy's saying, but the United Kingdom was not always a democracy, young squire. The United Kingdom was built by a dictatorship monarchy. The whole of England and the parliamentarians and the kings and the queens. England and the United Kingdom was built on kings and queens, and the country has done pretty fucking well.
Yeah,
endless events.
All right. How about this one then?
Oh god, here we go. Jake Paul, like, you know what? Watch the viewers just drop off. Yes, man, it's real. Jake Paul, that's actually mental. Like, fucking Joshua's gonna absolutely obliterate him. But the thing is about Joshua, his head isn't very good. Like, he crumbles under pressure. The thing is about this fight is, like, if Joshua can't keep his cool, let's just say he like can't sleep. He's got loads of issues in camp. He's like really stressed out about it because if he loses to Jake Paul, which I think is very unlikely, but let's just say this: if he did, he would be literally the laughingstock of boxing forever. So like all the pressure is on his shoulders to win the fight, and Jake Paul can go in and say, even if I lose, it's good. Do you know what I mean? Like, he's got no pressure. He'll sleep like a baby the night before. Like, fuck it. I'm just dancing with like the heavyweight boxing champion of the world. Like, if he beats me up, who gives a fuck? Like, and that's the problem. That's the problem with boxing. It's all about the fucking event. It's the day you do it. You could fuck up. Like, you could fuck it up. You could be like, oh shit, he fucked up.
How much money do you reckon these guys are making? Like he said yes to this. It'd be interesting to see the bag. It's a Netflix one as well, so it's going to be free on Netflix.
They're probably making tens of millions. They're not making a McGregor fight like Mayweather. They're not doing 100 mil, but they're making tens of millions.
Jake Paul's trying to say, I don't know from this tweet. Look, he's just said something about 250 mil. Yeah, stop asking me. Yeah, what do you reckon this means then? It's just more marketing.
There's no.
Is that 267 million split between them both?
They're not. Well, wait. How does he know? He hasn't sold the tickets yet, so like it's all a load of bollocks.
Well, they have to commit to a certain amount, don't they? Like, because they're not.
Yeah, but like they can
relying on tickets from the stadium or even online because it's free through Netflix. So, yeah, I don't know.
I don't know. I think that's absolute bollocks. Like McGregor and all the shit he did with Mayweather was like 100 mil. Like, he's not doing double and more. It's just marketing. Like, there's no way. I think you'll probably have comments below being like, guy, bro, shut up. Like, even if the sponsors, like, you know, DAZN and all the sponsorship they have through that, they're not ever going to do, like, anything close to that because they need to make money from their sponsors. This is ridiculous. Like, if that's the case.
Maybe we're naive, though. Like,
maybe we don't know. But I would just say, going on the basis of all of the other pay packet purses from everything I've seen in the past, UFC all the way through to boxing, that'll be a record by far. Type in this into ChatGPT and see.
I can't remember how much they pulled on the last one, the Mike Tyson fight. He must have got some nice bag for that one.
It's hats off to Jake Paul, to be honest, even getting it in the mix. Like, if Anthony Joshua goes into this thinking, this is an easy win for me to get some fame, and he holds his head, then he'll be fine. But the thing is, he's not very good. When he lost against Ustick, you saw like a little bit into, he's a bit fragile mentally.
All right, so Jake Paul's reportedly made around 40 million and Mark Tyson around 20 million for that fight. The total purse being around 80 million. Yeah, it's got to be bullshit, that 250 mil.
Yeah. Like, Joshua's not even nowhere near as big as Tyson, and he is obviously great. He was the world heavyweight champion of the world. But Tyson...
I love how we're sounding off. We know pretty much nothing about it.
Well, mate, like, we don't know much about it. I'll give it that. But just going by what the last fight was, it's just ridiculous numbers. It just sounds a lot to anyone who has no experience in it. You'd be like, what, 260 million? Like, look at all the other fights. I swear, the Habib McGregor fight was like under 20 or something. It was mental. But then he did the Mayweather one, which like really ramped it up. But no, it sounds a lot. But at the end of the day, we're talking about it right now. So if he was doing it to get a bit of marketing out, then that's all good, isn't it? It'll be a good fight. It's at a very good time of the year as well, just before Crimbo. I'll be in England for that. I'll be whipping it over to Brazil. Yeah, typical, just fucking Habib crushing some dude on the deck. He does like getting into a little fumble with some men on the floor. He does like getting on the deck with dudes, doesn't he? That's the thing about Habib. Like, I think the reason McGregor went down the bare knuckle boxing route with his company, which does bare knuckle boxing, was because I think McGregor believes that if he could have fought all of his opponents bare knuckle, he probably would have actually beaten a lot of opponents who just took him to the ground. Because when you take people to the ground like Habib, it's like the most unsexy way of winning. Do you know what I mean? Like, everyone wants to stand up and just tee off in the middle of the ring and just knock someone out with one punch. Like, that's like what looks good. That's like scoring a goal from the halfway line. But Habib's just like the techie Jew goal, you know? Like, you just run it in, you pass it into the middle, and you score. Like, he's just that guy. So I think McGregor's going down that road to kind of like... McGregor would be a real tough... At McGregor's peak, if it was bare knuckle, he would have been really, really difficult to beat. Because he used to have that reach and that precision where he would have probably knocked out like even more people with just one slap. Trump's message to Republicans could trigger unanimous vote to release Epstein files.
Yeah, so apparently Trump's saying to release them now. He's done a big U-turn the last couple of days, and he's saying let's just vote to release the files.
I think maybe it's because a lot of his core voters were like really probably on the, like, they really wanted him to do that and they didn't, and they probably
not letting it go.
Yeah, I think he should. At the end of the day, he said he would, and I don't really. The thing is, they may have done this. They may have got the files, and then like maybe it was a bit too early. Maybe the files were so big that he just wanted to like make sure that it's not going to put him in a bad light. And maybe they've just done a load of research on it and looked into it, and then they found like, okay, we can just wag it out there. And also, like, it doesn't look good on Trump that he didn't do it. It was a bit of one of those moments where he just kind of lied, and then it makes him look like he's a part of it. Like, just do it, mate. Like, if you're not involved with it, just do it, mate. You're a fucking billionaire anyway. You might piss off a load of rich people, but like, you've been nearly assassinated twice. Like, there's not much more that can happen. Like, and you're old as fuck. Just blast it out there and see what happens.
Have you seen this? I don't know where this has all come from, but basically people are saying that Trump gave Bill Clinton a blowjob. Have you heard about that at all?
No, bro. What the fuck?
Yeah, they're saying on the island or on the plane or something like that. There's something about Trump giving Bill Clinton a blowjob, and yeah, it's just been going wild the last few days. People talking about making memes about him, about Trump.
That's some serious fucking. That's some serious Twitter chat.
Yeah, that's fucking.
I don't think.
But anyway, so if he's trying to get people to vote to release the files, maybe that will actually happen soon, and then we'll be moving on from the Epstein files. Or like,
I was never even that fucking interested in it. Like, at the end of the day, like, the guy's a pedo, and like, isn't that enough? Like, what? I think people are just like, they want to get that "oh, I told you so" moment, because there's so many conspiracy people who I know, and like we all know someone who all they do is talk about the Epstein thing, and it's almost just like they just want to like prove everybody wrong. Like, oh yeah, look, that politician that I told you about, they all want it to be Tom Hanks. They all want Tom Hanks to be in it. Like for some reason, there's this huge amount of people out there who think Tom Hanks is a pedo, and I'm always like, guys, probably not. Like Tom Hanks, like he's just a fucking Hollywood star. He's got a great family. He's just an actor. Do you really think he's actually a mass? And they think that he wears this T-shirt with like a red face on it, which means like they're all code signaling to each other. Like think about it.
This is where it's come from. So there's been emails, haven't there? The last week or so, I'd say there's been like little releases of emails and stuff that Epstein's been sending to different people. And it was funny, all their emails are so short and just like not properly written as well. It's like all these billionaires just can't even write properly, and he's sending all of his emails off an iPad as well, Epstein is. But it's something like, does Putin have the photos of Trump blowing Bubba, which is Bill Clinton's nickname? I don't know about all of this stuff, but yeah, some of these emails that have been coming out have been pretty mad.
Mate, you know this whole thing where they think all of the people who are involved in this child sex trafficking thing, they all like put out certain signals to each other in this like satanic ritual. Think about this. If you legitimately did have one of the biggest fucking pedophile rings on the planet, why would you be giving out signals to the conspiracy theory community to give them a lead on, like, it's so fucking ridiculous. Like, if you were actually orchestrating this type of unbelievable heinous crime against humanity of children, like, there would be no evidence whatsoever anywhere. Why would they be trying to put on t-shirts to say, we're a part of the cult, man? Like, it's absolutely ridiculous. Like, no, bruv. Like, these kind of people, if they're on an island doing this kind of shit, they're not going to try and give you a little bit of a, ooh, like, they're not going to give you breadcrumbs. It genuinely is this fact. You can ask the internet anything, and there'll be one person who will say it's correct. It's like asking if bananas are healthy or not. You'll get 1 billion results saying they're healthy, but you'll also get 100 million saying they're not. Like, it's just the scale. Like, if you go on the internet and you ask the internet anything, you can find someone who is going to agree with your stupid mental point, and then you use that as that article. You're like, yeah, look, this article said as well. Like, it's because, like, it's just going down rabbit holes into this unbelievable self-fulfilling jerk circle of what I say must be right with my fucking bias. It's ridiculous. Trump's message to Republicans. We had that one. Bitcoin's about to fucking go 88.
It's fucking
88. Look, we got the level.
Yeah. Should we have a quick chat about? You're saying 88.
Yeah, 88k. That's the next support, and then we're probably going 74.
We've had some more news about GTA as well. Mate, we love talking about GTA.
Yeah, you've never even played it.
I didn't really play the last one that much, but I will.
To be honest, I wasn't. I remember when it came out. I remember that TV, that big box TV in that tiny apartment I had in Bristol. There was a period where I did sesh it for a bit, but like it will be so much better now. No, it was quite good online. I remember playing with Brownski a bit, I think, and also I was playing FIFA with Brownski a bit. But I just got sucked into Fallout New Vegas back in the day. I spent a week on that.
This one is GTA 6. An insider has claimed the game is so ambitious, other developers will be unable to match what Rockstar are doing for 15 to 20 years.
What is that? Another game?
No, they're just saying the next GTA is so far ahead. They're just saying that it's...
What I think is gonna...
20 years.
I think what might happen to GTA...
I doubt 15 to 20 years.
Yeah, no way. What the problem is about GTA... I think this is actually going to be a problem for like all game studios, is that when technology and speed of compute begins to increase so quickly, because we know that everything's going exponential. So like there's going to be a point where like each phone you get each year is going to be like so ridiculously different. Like it's going to get so much faster. I think game studios are going to have a bit of a challenge with it, because it's like, if you're going to try and build a game which is going to take you 10 years to build, by the time you get to the end of building it, the whole fucking market's moved on. You have to like keep rebuilding it. Keep rebuilding it to keep up with the times. So I think like what's really going to end up happening is they're going to release games as the base level, of the infrastructure of what that game's going to be, but then they just keep doing updates on the same game because it's going to get so fast, the increase of innovation of gaming, and there's going to be new, like, fucking, even graphics cards is going to get so much faster that if you're going to spend 10 years on it, by the time you get to the end of it, you're going to have to push out the release date, and that's exactly what Rockstar have had to do. They've gone, oh, fuck, we've been building this game for 9 years, but now AI is a huge thing. Now we need to put AI into the game. Oh, let's push it back by a year. So either they, I don't know, what they're gonna have to do is they're gonna have to like I want gaming companies just to use AI. That's the thing is when games, bruv, oh my god, it's gonna get so mental actually. When you play a game which is good, you're like, there's so many other things they could have done, but I think I think that's going to happen soon, where all the things that you wanted to be done are just going to be easily added because AI will just write the code and know what to do and all that kind of shit. It's going to get ridiculous. There's a game called Dark Sky or something, or there's a game where you're in a fucking space rocket. I think we played it. There's two of them, actually. There's one which is the most expensive game in the world, which I downloaded, and it was really expensive. And I only played it once. And then there was another game called like Dark Sky, where they use AI to like keep recreating like new worlds, which are completely different to the previous world. So like you don't ever have to like download a DLC update, because when you're playing the game, it automatically makes more shit for you. We're going to get that kind of shit coming soon, bro. Where, like, you know, Baldur's Gate, where there's like a lot of different avenues you can go down. There's going to be a Baldur's Gate come out where it's like
generated as you go.
Yeah, you're just gonna play a completely mental game, like completely different to everybody else.
This from Watcher Guru, just in: Trump administration reviewing proposal to allow the IRS to access and tax Americans' foreign crypto account data. Not sure about that one. Lots of people saying, what the fuck?
Trump administration reviewing proposal to allow the IRS to access and tax Americans' foreign crypto account data. Well, that is kind of like America have the monopoly on worldwide income, so they're the only country I think that do this. I don't know if it's the only country. There might be some obscure random country, but out of the G20 something now, they're the only country that tax on worldwide income. So you essentially don't have to live in the country as a resident, but you still get taxed. And that's part of why the American infrastructure of their military is so strong. That's what I put it down to. And I also think, which is kind of a hidden, or let's just say a silent rule, is that the American government will always come and bust you out of a country. Like if even if you're like, if 1,000 people get like held hostage in some country, like the American government will come and get you out. But a lot of other countries wouldn't do that. So it might be a pro and a con if you get seized. But no, they probably will do that. The issue is about America, though, is like that they're probably going to have to change that at some point, because it's either all other countries start taxing worldwide income. That Germany are apparently thinking about it. The UK might follow suit, and then that's when you have to start revoking citizenship, and then that gets a little bit dicey. But I don't know. Right now, you can be a resident of the you can be a citizen of the United Kingdom, have all the rights of a UK citizen, but just not be a resident and not pay tax. But that's not the case in America. So I don't know. That's probably, that's what the laws are. Sailor again. Here we go. Oh yeah, he bought Bitcoin.
I don't understand what this guy says. I was very wrong about my prediction. This is way more than I thought, and absolutely disgusting and worrisome that they bought this much and we dumped more than 10%.
It just sounds like attention farming.
Complaining a lot of like, sort of like when people are announcing bars and going, why is the market going down, etc.
You got to remember, like, I'm still buying Bitcoin. I have a DCA strategy. Like, if you look at a DCA strategy in comparison to a profitable trader strategy, like, the trader is only making 30 to 40% more. So DCA is what I do every day as well. Like, I have cash flow that comes in every day, and I buy Bitcoin every single day, and that will always happen, regardless of the price. The only time I stop doing that is if the CBBI is over 90 or the CBBI is below 10. So if it's below 10, I'm trying to get more money in. If it's above 90, I'm trying to get less because I'm trying to hold. But I've said this before, like with swing trading, as a price action swing trader that I do predominantly, I don't actually need all the time to be putting money to work, because if you have cash flow from real estate or a company or wherever it is, you can play a very easy strategy of swing trading where you just say, look, this is my analysis. I'm just not going to buy when I think it's high, and I'm just going to buy more and more as it goes lower in my analysis. So when it's high, I don't, and when it's low, I do. And you just do that with cash flow coming in. And then you don't ever sell the asset you're buying as an investment, because as an investor, that's why you're buying it, because an investor is buying something for the long-term appreciation of the asset itself. So Michael Saylor is an investor, and he's a fundamental guy. So he is buying Bitcoin at whatever price it is at because he's looking for the long term. But we always know Bitcoin's going to rise at the same rate as inflation, similar to the stock market, similar to real estate. It all goes up 8%. But we know that by the prior 15 years of Bitcoin history, it usually beats the inflation rate. So it's going up in value. So I don't think there's anything wrong. He's just DCA. Easy. Oh, mate, I love DAP Radar. That's an old school company. Be sad
about this, brother. Yeah, 3 hours ago they put this on Twitter.
Oh no, that was such a legendary company. No,
yeah,
DAP Radar. I liked
DAP Radar a bit.
DAP Radar was like where you just went on to find all these random shit games with 4 players who were the devs. Yeah, no, that DAP Radar was a great company, but it goes to show the state of the decentralized application marketplace. Because I actually got into crypto. I was trading before, but I actually got into crypto because of decentralized applications. That was really like what got me interested in the technology. The funny thing is about me, I used to trade in Australia, the Great British Pound and the Aussie dollar, making no money. And then the reason I found out about Bitcoin was because it came up on the trading charts. But I actually was more interested at the time in the decentralized application space because I thought that was quite cool. How it was like, wow, you can have a DApp and it's like you can run without having say a CEO or a founder could run on the blockchain. But that's actually a bit of a shame. But it goes to show that the times, man, like DApps were, when I was like fiddling around with EOS and Ethereum, all that crap, like it was crazy to think that we were all frantically trying to get into these things because we didn't want to miss being early. But it's almost like getting into those things now is like a lower level than then, if you know what I mean. It's all just fucking nuking. No one uses dApps. They're all too complicated. Like, the only really good decentralized application is Bitcoin. And that doesn't even use smart contracts. So, DAP Radar, bro. Oh, no. Asian bros. What, Asian bros? Is this a situation to monitor or nothing ever happens?
Can you check? We've got some people in the chat as well. Can you check copper gold chart, please?
Well, the relationships between copper and gold in terms of I can have this ticker.
When that reverses.
I need to find a commodity which is. Can you give me the ticker, please?
Yeah, to put your tickers in the chat, bro.
Yeah, whack some tickers in.
Some Chinese warship entered Japan's territorial waters. I think this is just fucking Twitter bait, isn't it? I love falling for Twitter bait. I'm like, yeah, the next war started and this.
Mate, you like falling for little traps in games as well.
Mate, I'm awful at just like
you're up for getting fooled.
I always just full clip it all. You know what I'm saying?
We've been streaming now for a long time, but because you guys, anyone who's watching now, you're OG legends because you're still here. Give me your tickers and we'll do those things. I also want to mention, I already did copper/gold. I want to mention Botmaster Legends. Botmaster is coming out, guys. We're going to have it out before Black Friday. It's a really fucking sick project. We've got a team of people finding the best settings within the indicator Botmaster, which you can use manually or automate. And you have people finding the settings for you so you don't have to do any of your own back testing. That's fucking ridiculous. This is a big thing. Right, he's saying it's just copper/gold, but I already put that in, my guy. Let me get up a new chart then. We won't do inflation adjusted, young squire.
Yeah, my brother loves the cock.
The cock?
Yeah, he likes that.
Wait, what, brother? You were just like, my brother loves the cock. I mean,
yeah, he does like a bit of that.
How is the bro, man?
Yeah, I'm sure he's
watching.
He's all right. Yeah, he's probably watching right now.
Look at that move from Goldie. Yeah, so what was I going to go on? Copper / gold, was it? I can't find it, my guy. It's probably in here somewhere, isn't it? Wax. That's an old school shit, man. Gold mini futures.
Waxy.
What else is going on in that news, bro?
Some more shit here as well. Apparently, we've had some stuff from. Man, I actually love that dude. I did really enjoy him, but yeah, there's something here about some more stuff coming in with the regulation stuff that we're having issues with. Brian Armstrong. You love Brian Armstrong.
Yeah, he's a bit of a legend, isn't he?
But you can't actually hear my audio, so.
Oh yeah, why is your audio gone again? Oh yeah, no, it's. I thought you were talking about Brian Johnson. Yeah, no, Brian Armstrong. Yeah. Look at that bald head of his.
Yeah, it's Lex Luthor.
He actually looks like a mannequin. One of those ones you see in a shop. Like, yeah, what's he done? Coinbase Brian Armstrong says crypto market structure bill is nearly done, with only 10% left before it clears committee by Thanksgiving. Crypto market structure bill. I haven't read that yet. I don't know. Maybe
I don't know much too, but about that as well. Made this as well.
It's just a regulation. Yeah, okay. Oh no, not him, bruv. God, Arthur Hayes.
I don't know much about this guy. Who the hell
Arthur
is
Hayes is the founder of BitMEX.
Oh right.
Scammex. Yeah, he basically made probably about $300 million through essentially leverage perpetual swaps on an exchange called BitMEX. He was openly, and I think admittedly now, was trading against his own customers by using lots of data in an unregulated way to trade against people trading on BitMEX and liquidating like literally up to $350 million worth of Bitcoin, which he now has. He got investigated and prosecuted by the SEC. He ran away at one point. He went back and he settled. I think he settled for 50 mil. But he made hundreds of millions of dollars through BitMEX. And we all know with the engine overloads and all of the crazy market movements on the exchange that he was essentially just fucking liquidating either side to get the exchange fees. Because he's not always liquidation stop losses. So if you have lots of open interest on your exchange and all of that open interest gets forced to place a market trade, they pay a fee for that. And the fees are very high. So the incentive of the exchange is to make as many people pay market order fees as possible all of the time, which means going against open positions, essentially. So he just made fuckloads of money by just trading against the majority all the time. And everyone paid fees on his exchange and made hundreds of millions of dollars. Pretty smart, if you ask me. Immoral, but he made a lot of money out of it. I know people who basically look at him and think, you've got my Bitcoin. I moved away from BitMEX really early and went to Bybit, one of the first, because of the whole situation, but what's he done now? Dub Hayes is dumping every single altcoin he holds. Well, you know, fucking, who hasn't? Yeah. Over 8 million cashed out, including ETH. That's tippins to him anyway. That's nothing.
It's got a nice little smile though, hasn't it? We've got a
This is why you always get fooled, bro, by scam artists, because the smile.
Yeah, look, he looks kind of trustworthy to me.
I would say this. That smile is one of the most dodgy smiles I have ever seen in this space. It's way too, like, if someone smiles at you like that, it's because they're getting a huge gain out of you. No one smiles at another man like that. I don't even smile at my mother like that. The only reason you smile like that is because you know you're getting most of the benefit. That's a beneficial like that. Look, he's so happy. It's too happy. He's so happy about wrecking everyone. Huh?
We've got this gold copper thing in the chat. Jim, yeah, this guy's put something in there for the chat.
He really wants me to do BTC copper. We'll type in exactly what he's put in. What? Capital? This is probably an ETF of copper or something. I'm literally slamming the whole thing in for this legend. Okay, let's have a look on the monthlies to get a big look. Let me get rid of Algo Master for a second. So this is the relationship between Bitcoin and copper. Let me just make sure that on the ticker we've got. Let me get rid of Wave Master a second. It's had a nice move for sure, but I'm just trying to understand exactly which side we're looking at. Because in terms of if copper is up, then this would not be a good idea because copper has rallied. Let me see the actual price of copper. Because if copper is nuking, come on, bro. Not now. Let's just get rid of SBX for a second. Actually, no. Bloody hell, the price of copper is absolutely nuked. Yeah, so basically what you're looking at, in terms of the price, has been rallying. There's a pretty significant... Oh, wait, where's my chart of copper gone? Oh, no. He's taking DOT. Everyone's just putting their tickets in the whole fucking things now. Yeah, copper fell very quickly for, like, look at that. From the high to the low, it dropped 30%. I'm just trying to work out the correlation between the two. That was probably that there. So copper fell, this rallied. So yeah, it's at the levels it's never been before. So yeah, I would say probably if you're looking at the price of copper, it's a good time to get in if this is looking at that relationship. But Bitcoin's nuking as well. Yes, it's literally above anything prior. So there's gonna be a deviation. So I'd say if you're looking for the flip on this, the reversal, there's your level. Every single time you get a deviation of the high. Look at that one there. So there could be a pretty juicy move down, yeah, when it deviates, but wait for the deviation. You could be looking at about 40% move down. So when you get, it could go higher, but if you get a deviation of it and then something like that, that's when you're looking for it to fall. And it falls very quickly as well. But this is a good example here. Move down, wick back up. That was your entry. You're looking for that up here on the copper gold chart for sure. And gold's at the highs as well. So yeah, I do think it's probably a good flip.
Copper has a use case in tech, so it's got a greater demand potential than gold.
Yeah, but only at the specific right point. And you have to remember that if the asset itself is used heavily in industry, it means it's much more difficult to predict what the supply and demand will be. Because if a company goes and buys a lot of it and holds it off the books, or a company comes along and sells loads of copper randomly, like look at this. So yeah, it potentially could have more demand in industry, but that doesn't mean that it's any more easy to make money from it. The great thing about gold is that it has an incredible stock to flow. So then you kind of know the price is very stable. What's Nike up to at the minute? Nike's been bumbling around for too long. I really want Nike to have its move. I do think we're probably at the lows. I think fair value is around $90. So I've got a pretty decent investment in Nike. But the great thing about Nike, you get like a fucking 2.8, I think it's 3% dividend on it, which keeps me in a good spot. Like you put 100 grand into it, you're making 3 grand a year for nothing. So if you lose 3% on price, you're just chilling. It's gone down 20% here, so you can get even more. But I would say at the bottom barrel right now, we're looking at prices going back to 2017. So, you know, since 2017, which is getting on for now, nearly 10 years ago, by the way, because we're going to 2026. So for the price, irrelevant of value to stay there is pretty mental. And I will look, actually, at a Nike/M2SL chart just to give me some clarity. Oh god, it's not really populated very well. This is only going back. It's not really populated correctly. I wouldn't use this, but even that, it's, you know, there's a significant drop in value here. So if you, I don't want to go by this though, because it doesn't look very clear, but yeah, we're looking at 2017 prices in 2026 for a company that doesn't put all of its money back into dividend yield. It still has a huge proportion of its cash going into growth, which is stuff like new products, innovation, advertising, huge partnerships with the biggest people in the world. So like, it's still a growth story in itself. But I do think Nike's a good buy for sure. I've been saying this for a while. I actually got into Nike like right at the lows. So I'm waiting for my investment, by the way, guys, not lower time frame trading. I'm looking for my investment to pay off probably over the next course of a few years. And it's a decent hedge against Bitcoin as well, because Nike's at very, very likely rolling around near the bottom here. So, you know, if Bitcoin and gold and the stock market do go into bear market, it might affect Nike, the stock market in general. It's in the S&P. So it might affect it, but Bitcoin and gold are going to fall much faster and further than something like Nike after its massive 60% fucking correction. I don't even know what this is actually at this point. 70% correction. So I think you're probably buying Nike near the lows, and other asset classes, especially gold right now, is yeah. If I had more gold, I actually have the gold that I own is only gold that I will hold forever. And it's paper gold at this point. I used to have some bullion, but I just got rid of it because it's just like, you know when you have like gold bullion is cool because you had to get to buy something, and it's like you hold it and you're like, this is money essentially. I've got my little nugget of money here, but it's such a de-risked moment of like the whole world collapsing. You're ever going to use it, and also Bitcoin. I just see it being a much more interesting thing in terms of the growth story on it. But Nike's a good time. It's a relationship between the price falling and then what's happening in other markets. I got a nice and decent little bit of Nike. I like the closed brand anyway. One of those ones. So we look at this is the gold copper.
Do you want a fresh? It's really like just straight out of the oven. A shift tweet.
Straight out the oven. Let me just quickly get up my what chart was we looking at on this? This was the normal gold chart. Let me just have a look. It should pop up with my let me leave my, because Algo Master's been killing this market. Look at this, bruv. It's just blasting off into the absolute oblivion. The numbers are just ridiculous. Yeah, let's have a look at what's he up to these days. God. Do you want to read it to the community, my friend?
CNBC talking heads and their guests are at a loss to explain why Bitcoin is falling. They expected it to be much higher by now, especially given all the bullish news and the strength in gold. Their confusion results from not recognizing that Bitcoin is just a modern day tulip. It's just a classic shift tweet, that, isn't it? You know,
it's probably written by his team, yeah. No, it's like I said in the prior streams, I just don't bother with it because I know that he's not actually speaking from his objective truths. He's just trying to get engagement farming going. But a lot of people used to call Bitcoin a tulip bubble. Even they always say that. They've been saying that for years. But the difference is that the tulip bubble has got no accredited stock to flow from the asset for supply and demand being held for long term, because you can't hold a tulip long term. A tulip dies. A tulip doesn't have a longevity cycle. You can't hold a tulip and it lasts forever and sell it in 500 years or 100 or 2 years. You couldn't even hold a tulip for 2 months. So the tulip bubble is a perfect example of genuinely a bubble of something that has absolutely no longevity or utility. But the price is only going up due to the fact that people are chasing the initial gain. That's what really a bubble is. But bubbles that last, for instance, the .com bubble, right? So like the funny thing about bubbles, everyone's like, oh yeah, they're bad. Well, the .com bubble, when you look at this chart, was here. And we had a huge .com bubble, and then it crashed. It burst. But that was because the beginning of the .com was building up slowly. The end of the .com bubble was the people were only buying stocks which had internet-based protocols or websites. The only reason they were buying them is because other people were buying them. So like a bubble is when people are only buying things on the premise of the price increasing to get more money. And we know that the dot-com bubble had that period, but ultimately the dot-com bubble, you could call the whole stock market a dot-com bubble still, because all of the biggest companies use the internet now. So it's just the bubbles that survive are the things that have good fundamentals and utility and are useful in the economy. But the tulip bubble is completely different. That's literally just a frenzy of people buying something with no utility or longevity to chase price increases. What have we got here? What happened here? Isn't this to do with the exchange, the amount of money? Why is BTC not following M2? Can someone explain this? I actually looked at this myself, and I put Bitcoin. So you do BTC to M2SL, and it's quite interesting. And the conclusion I came to was because Bitcoin is so small in comparison to the size of the amount of money in circulating supply that it's moving. It's essentially like looking at a 1 minute chart on a global asset. It's literally doing that the whole time on the 1 minute, but when you zoom out, it's much slower. And it's just the relationship between the size of the market and the amount of currency in circulating supply. So if you look at this, let me just do the Nike chart, make it easy. You do BTC, and then, yeah, you do M2SL. It actually does change, though, because I looked at it myself. It's not absolutely perfect. There are slight changes, but the conclusion I came to is that because Bitcoin's such a small asset class, is that the global liquidity actually doesn't affect Bitcoin that much. So it's not absolutely perfect. There are some changes, but I do agree with him that it does look very, very similar, the M2SL money supply. And I think it's just because Bitcoin's a tiny market in comparison to the amount of US dollars in circulating supply at this point, and it affects other things more greatly. And also that's inflation adjusted, so it means that what you're really looking at, because Bitcoin's so small, the value is really changing a lot. It's the relationship between the price and the value is very close because it's so small. And that makes sense. If you look at a 1 minute chart, it's just going like that. It's pinging up and down. So that's what my conclusion is. But he's right. I did look at this myself. And it's actually still up for debate. And it's also something I still want to look at more. And I was thinking to myself, there isn't actually much relationship here at all. But that was my conclusion, the size of the market. Let me find what I was looking at, Nike. What else you got from Broski?
Not much, to be honest. I might have to go now, but we'll be back tomorrow, I guess.
That's true. That doesn't correlate why that's why it's broken. The correlation is broken. Because it doesn't have to correlate exactly all the time. And I was talking about this the other day, like the correlation between the size of M2 and Bitcoin is like trying to compare an ocean with a puddle. Like, the ocean has waves. Yes, sometimes the waves on the puddle can be at the same rate as the ocean, but you know that the puddle's doing this and the ocean's doing that. So I can't really see me. The puddle's doing this, the ocean's doing this, but the puddle's like that. But sometimes they can both be in sync, but then they go out of sync. It's hard to do the two different things at the same time. So it's just, I think, genuinely speaking, it's just because it was a correlation because the market was doing the same thing. But it's like trying to look through two different complete market sizes. Yeah, we've nearly done 3 hours. We should push it to 15 more minutes to get that 3 hour mark.
I'm getting some messages coming in. Might have to go, my friend. But we're back every day now, streaming for the next 10 days.
Oh, yeah, fuck, I forgot to even mention this. Guys, we're streaming every day until Black Friday. And that's because I'm doing a whole lot of product releases. I'm going to release a new thing called Botmaster. We're going to do a big sale on the product. We're going to do the indicators. It's going to be a one-off lifetime thing you can buy. But Botmaster is going to be the predominant new flagship product. It's actually, indicators is here, but what it's going to say on the new update is Botmaster is going to be at the top. Indicators is going to turn to Algo Master and then Hodl Master. So we're going to have Bot Master, Algo Master, and Hodl Master. And it's going to be 3 different pillars of the business. But Bot Master is going to be the flagship product. Because I said to the team, I was like, guys, we are doing automation and botting more than manual trading now. So the company should represent that. And it should be, well, we are now going to make it so our bots and the Bot Master indicator and the way we do the back testing and how you can get access to that, that should be the thing which we promote and sell the most, because that's what we're all doing as traders. Viking is like 75% automated. I've got like half my money automated. Everyone in the community is getting into bots. So if you go in here and you go to the bot crew, we've got all these people setting up their bots. We just got people firing in bots the whole time. So it's, yeah, the company's going to be a fucking botting company at this point, which is, I think, the best way to go, because, yeah, it's just growing and growing and growing. More and more people using it, and you need it. You need it to be profitable. So Botmaster's coming out, guys. It's going to be a big Black Friday sale for it. And, yeah, we're talking about getting professionals to find new settings, which you can use on your chart and then automate. And you can trade it manually if you want, but we've got a whole team of people with manual input finding the settings for Botmaster. So it's a very, very valuable product. I think it's probably, because indicators are very valuable in the process it takes to build them, but Botmaster is constantly needed to be updated and changed for the settings for your bots. We're going to give you all the settings constantly from the team. 2 professional traders who use bots are going to find the settings for you to use on Botmaster. It's going to be very, very powerful. And like I said, very difficult to copy. No competitor could really do that, because they need to find the people who know how to use the bots, who know how to use backtesting scripts, who then feed that information to the front end, which you can then copy and then use yourself. That was a long-winded thing. But anyway, I'll see you on the Flippers Legends. And yeah, any other questions I'll take for a little bit. I'll do like 15 more minutes. We'll do a few more questions in the chat, because Pete is now gone. We're getting to that point now where people in England are actually waking up and coming on stream, because they're all getting back from work. So yeah, it's getting to about 7 p.m. now. So get those UK people coming in. Any questions you have, Legends, I am here to answer them. I'm just chilling out, keeping it real. We've been nearly streaming for 3 hours. I'll do a 3-hour stream, but I'm streaming every day until Black Friday. And we're going to be releasing a whole lot of new stuff. It's going to be really interesting. Let's have a look at the volume today. 23 billion is quite spot. 84, yeah, that's more in line with what it is. Can you give a quick show and tell of your indicators? Yeah, sure, man. Like, this is what I do. The indicators, well, everything you can see on the chart right now is my indicator. So you have something called Algo Master. So on this specific chart, it says, Algo Master is another indicator, but this is called AI Charting Tools. This shows you all the levels. So that's first thing. This shows you where the open, the closes, the yearly, the monthly, the weekly, the daily, all the way to the 4-hour open and closes are, which are these lines. And then the blue areas are support and resistance. So you can see that it's basically SR levels. So levels you should be looking at for potential trades. That's going to be bang on around that. Yep, 84, 88's here, which I've been talking about. 74 is obviously going to be the low wick. And then you've got all the resistance above us. So for an example here, very likely going to be resistance. Blue area, very likely going to be resistance. That's obviously a massive area there. 200-day moving average with the 2 blues, bang on. So that's like support and resistance. And then you have Wave Master. And on lower time frames, very, very cool. I'll show you on a higher time frame as well, but Wave Master is essentially the momentum of the market. So a good example would be, you know, you have flip, massive push up in price. These yellow dots are like warning signals, like potential for momentum to swing back, and then obviously you got the move back. So, and you had a bearish divergence here as well, which was bang on this. So you see how the price rallied and made a higher high, but momentum was falling. Then you got a red bearish divergence, which is here, and then the price fell even further, and then we're going to oversold, overbought, oversold. So you can see how the price then went to, I'm just kind of giving you a little bit of a tutorial. So then the price is falling down. Again, you have a switch. You have 2 yellow dots. That would have been there. And then the price went up, and then the price rallied. Again, 2 yellow dots. That's at the top of here. Massive fall. So basically, it's giving you an idea of the momentum of the market. It's actually using wave flow and then a few other RSI signatures. And also, you can see this. You see this gray line here. The thing is, I have it set up in a way where it's probably not very like visually easy for you to understand, because I just know how it works. But you can also see that when the price goes out of the bands, so it's using Bollinger Bands. When it comes out of the bands, it actually falls back in them. So you can see here, when it really goes above the bands, that band along here, let me just show you. So you have along here, when things get above the bands, you usually get a snapback, very similar to Bollinger Bands. But you can set this up and customize it as much as you want. It's a very, very nice tool just for general, you know, the momentum of the market. I keep it up the whole time. Up here is our funding rate indicator, so it tells you what the funding rates are on exchanges. A little bit more complex in terms of what funding rates mean, but you guys can dial into that. And we have a ton of stuff. Like we have the volatility index, so it tells you if things are super volatile or not. Very simple. And then we have obviously the normal linear indicators you can use. So like this is a very powerful tool which I use on Algo Master. It's actually, so it's a setting within Algo Master, and you go down here and you will set up bands mode. So these aren't Bollinger Bands. These are confluence bands, which we developed as a team. And it's a pretty, this is actually pretty dire and sell pressure. So what it actually shows you, to make it simple, if you have the bands at the low end, which are extremely blue like this, it means that you have more buyers than sellers, because in this specific example, you can see that the higher side bands have no blue. In your screen, it'll be red and green. But if you have lots of blue underneath the price, that means there's lots of buyers. There's no sellers. So we can see in this specific example, the whole time up here, we had a lot of buyers coming in and there was no sellers. When we actually had sellers, the price went flat. And you can see that it's quite similar. Blue at the top, blue at the bottom, equaling each other out. And then you have, again, look here, it completely dissipated the amount of blue above it, and then lots of blue here. In this example right now, guys, we do have a significant amount of sell pressure coming in because the price is falling, nothing below us. So it's another good reason, because you can see from this indicator, the really dark blue came in up here, and you can see that there's nothing below us, but there's lots of selling above us. And for you, it will be red and green. It's in the Algo Master indicator. You just go on bands, and you turn these on, cloud bands. But they're actually specifically made by our team. They're not Bollinger Bands. They're slightly different in the way we calculate. But it works very well on lots of it. Like all that selling there, nothing below us, sell coming in. There is also a strategy to be played on the basis of if it comes into the bands, you can actually bet against it as well. There's a lot of cases where if you get into the bands, it's usually a sell into them. Look at that, all there, fucking hell, it's buys coming in. But yeah, there's a lot of different ways you can look at the bands. I look at the higher time frames because it's another volume signature, which I look at. I keep it very simple with my parameters of what a bear market is. Volume needs to be dissipating, which we're not really getting on this market, except that red node there. It's just interesting to see that this market cycle, we have had less volume than prior cycles. Simple as that. And this is on our crypto on-chain suite. So this is another MDX indicator. You can see the volume has not crescendoed like it usually does. But we did have a big round sell here. And this is another thing on high. I'm on a freaking weekly right now for Bitcoin, okay? So you can use this definitely in Confluence to say, are we starting a bear market? For sure. And I say it's a 33% chance that we're starting a bear market, like I've said on this stream a fair few times. About 33% at this point because of the 200-day moving average. But what you would usually want to use, like straight off the bat. Let me just whip this back up. So I've got all my levels in here, but if you turn on this, so I don't have it on this chart because I have the yellow lines, but if you turn this on and put simple on and just make them blue so it's easy to see, you can see these blue areas. It's quite difficult to see on this screen because I have it quite faded, but you see these blue boxes on higher time frames weekly. This is like a significant area of resistance if it's above the price. And then obviously you have below the price as well, significant areas of support. And this is on a higher time frame. But I don't have it on this because I use my yellow lines instead. What I use this for is on slightly. Let me go on. So this is a weekly chart. Let me turn this on my weekly actually for now. Yeah, these are pretty important levels, which you want to keep an eye on. Let's whip this down to a daily where you get a nice clear picture of the buy and sell levels on AI charting tools. So AI charting tools, you can see on the daily. You can see this level I've been talking about, 88K in here, 84 to 88 is really important. You have resistance here, resistance. You're coming into support at 74. But you don't want to cloud your chart with too much stuff. So I usually use it on lower time frames without any yellow lines. And then you can see all the support and resistance levels. Obviously, that's a good level there. But Bitcoin's nuking right now. But yeah, the indicators, I've been developing these for literally a decade. So we just tweak them and update them. It's completely full circle as well. So the indicators encompass every single type of manual trading strategy you could dream of. There's no price action trading strategy that you can't do with our indicators. They have everything. Obviously, it'll take you some time to learn them all and do all the things, but it's a complete full set. So it's a complete toolkit. But we do have a product. We're going to change it quite soon. So on the website, if you go to plans, we do have a product which is just the indicators. With this, you do get access to Discord as well for read only, so you can watch all the Discord channels, and you do get access to the community as well. I should articulate this on the price card, we just don't. But Pro is $100, and then at the moment, because we've got Black Friday coming up, if you want to get everything in the platform, so literally you want like the charts, long to short ratio, you want the freaking indicators, you want Hodl Master, then it's a tailored package. So you get on a call with us, you tell us what you want, we total up all the different products, and then we give them to you, basically whatever you want. But it's a very tailored business. Like we're not like a company which is similar to competitors where we just try and get like loads of people in for a low subscription. Actually, we're much more like people orientated, community orientated, actually working with you, like a bit more like human touch. And it's going that way anyway, because a lot of people just don't want to have like just an email to mail if something goes wrong. We have like actual people who can help you and get on calls and mentorship. We have a whole mentorship program, but it's all going to change soon. We're actually not going to have this product anymore. It's going to be slightly different. We're going to have a monthly subscription for a few other bits and bobs. You can even buy Discord on its own. We're going to make it so you can buy everything on its own. So you can have Discord on its own. You can have the indicators on its own. You can have this on its own. At the moment, you can only have indicators on its own and then the whole product. We're going to change that and make it so you can kind of like buy what you want, basically, for the services that we offer. I can actually get rid of this now. I don't need to be on this call. And then, yeah, Discord is here as well. This is our community, so you can see people just like chatting away. Here's my video going on right now, the bear market. But yeah, you can see you have a community of traders who put all their positions in. We have the full analysis, so this is basically like in-depth analysis with Viking about everything he thinks. And then we have the pro signals, which is everyone in the community who are a mentor posting their trades. Predominantly me, Viking. We got StuTube in there. We got obviously our Quant Turbo Lord in there, posting all of their charts and patterns and what we think is going to happen, long to short ratio stuff. Here's another good example of Algo Master. Caught that fucking move nicely. But yeah, we're going to do we've got a big Black Friday offer coming. So but the thing is about Black Friday, we're actually not going to have this anymore. So if you want to trial the indicators, just buy this one. You can trial it. If you want to upgrade later when Black Friday happens, yeah, of course you can do that. Just message support and we'll just upgrade you to a different package. But ultimately, this is the one which is going to go away. But you can still buy it. It's not going to be discontinued. At the moment, you have all of the custom stuff. And this whole website, by the way, guys, the whole website is about to change. I could probably show you it on staging. I don't really want to give away the URL, but fuck it. It doesn't actually matter. So we have... There we go. That's not the right thing, Hodl Master. So we have a new landing page style coming soon. This is not finished, by the way. You can see like this is not actually done. But we're changing the website to make it so it's a little bit more easy. And by the way, this is not the perfect text or anything like that. I'm kind of giving you a sneak peek of what the new website is going to look like. And then we have, these plans aren't there yet either. This is a staging website. But yeah, the kind of company is going to go down a different road. So it's going to be Bot Master Automation as the flagship. Algo Master will be the indicators. And then we'll have the professional trader community and then the trading course, obviously, which comes with, Discords in that. But we're kind of changing the website. This is complete bare bones. Like, this is like, we haven't even really started this yet, but you can see how, really, I'm just trying to simplify the process. So all the products that we offer have their own potential chance for you to purchase. So you don't have to buy the whole platform or just indicators. You can have Discord if you want. You can have this if you want. We just want to make it so everything's a bit more broken down. So for instance, yeah, you just want the automation, the Bot Master automation. You click this, you can buy that. If you want the indicators, you can buy that. If you want the community, you can buy that. And we'll try and keep it to 4 things, probably. Keep it simple, because right now we have so many fucking things going on. Like, we have literally all these different bits and bobs. But we'll probably keep it to 4 things you can buy. And if you want to buy multiple shit, then you can add them together. But the new website's coming. This is, like I said, completely not ready yet. It's going to be much more detailed, and we haven't even done the background color. It's not even in properly and stuff. But yeah, that's all coming, guys. The company is definitely going to begin to change, and also we're going to have more indicators on this, as well as the free. If there's one thing you can get, which is completely free, which I do promote a lot, it's just use my free trading bot, because I have one for free. I use it to get customers. They use the trading bot. They've signed up to an exchange. They get it for free. And then when you start making money with it, you're like, fuck it, I'll buy something else. So this is a free trading bot you can use. You literally just click how to set it up and just sign up with BingX or Bybit, and it's on there for free. You just have to use my referral link, and then I make money from the referral link. You get the indicator for free. Well, the strategy bot for free. The traders groups always kicking off for people. But this is just showing you, like, this is what I'm showing you now is just the charts and stuff, but this is just copied over from Discord. So everything you see in Discord, we also have the ability for you to view it on the Zir website as well. So all of the price charts and everything, a lot of written content as well. But yeah, it's all going to change. It's going to be, yeah, the 4 pillars. We're going to have it so Bot Master, Algo Master, the community, and the full comprehensive course. But like I said, this is not a finished website. It's going to be much more tailored in the future. But you can see how there's a lot of difference between what we have it looking like now. I'm just trying to simplify it all, guys. Like, I just don't want it to be so cluttered. Like all this stuff, like yo. It's just like, nah. What we do, hypercharge your trading fucking shit. And if you want the products, you can buy them. And yeah, we're really changing things at the minute to make it easier. So we're probably going to lose, guys, and lose support and go down to 88,000. Shit, I've done 3 hours on stream. Don't forget Lord Dumpu, of course. The Lord Dumpu Aruniente. Yeah, I'm healthy, man. I had appendicitis. And yeah, it was pretty close. It was a close shave on my life, but I managed to survive, and everything went smoothly. I had a really good surgeon. If any of you guys are in Dubai and you need a good surgeon, I'll fucking hook you up, because he was just a great fucking, just very clinical, did everything properly, like gave me so much extra support, was messaging me every day saying, are you feeling this? Are you feeling that? He was a fucking legend, actually. The amount of extra just stuff he didn't have to do, which he did, which we would not get in the fucking NHS. No, you wouldn't get it on any public service. It was very, very good. Anyway, I'm probably going to bounce, legends. Great stream. Black Friday's coming up, and I'm streaming every day. So I'll see you tomorrow at the same time for another giga stream. And I'll be streaming every day. But you're all legends. I'll see you on the flip side. Yeah, 88k. I would say 88 to 87k is the next trade for a bounce. You can take that position and see what happens. Anyway, legends, I'll see you on the flippies. You're all absolute prolific, perpetual legends. Have a good